future. I think growth also is going to continue lower. So, and I don't think the Fed particularly likes hiking rates. I mean, it's almost like they like to give people stuff, not take it away. You know, give them punch, not take away the punch. So I think, if anything, that they're looking for an escape route. They've talked very tough. I've been very surprised at how they're tough talk. But then they've not really been challenged because they've not really been challenged by the growth. You know, like the worst case when Volcker was hiking rates, he had to have an armed guard. Right? That's how bad things got. Powell's kind of nowhere near that situation right now, right? He's never had to hike into an extremely difficult economy, so he's not really been tested. So I think this is just getting going, really. This is going to be the next 3 to 6 months are very interesting. We'll see if the Fed puts its money where its mouth is.
Guys, thanks a lot. Really appreciate it. Thanks for setting up the week for us. Simon White and Vincent Signorella, appreciate it. Thank you. So coming up, more on our question of the day. What is the midterm trade? We're going to be talking about this throughout the next 2 hours. Katrina Dudley, Franklin Mutual Advisors Portfolio Manager, joins us next. This is Bloomberg.
Window of opportunity between the end of the Fed hiking cycle and the recession itself. You know, this summer we wrote about that. We said it's too early to think about the Fed ending its rate hike cycle, so we didn't try and play that rally. This time, though, we think there could be this little window of hope, particularly at the year end when there's pressure to perform and people have to chase stocks in the year end potentially. And as Taylor was saying, you know, the midterms historically are a positive catalyst for at least for the month of November.
Some years ago, this little town became famous for having 5 centenarians and made it to the cover of National Geographic, having 5 centenarians out of, you know, a couple of thousand people.
Eu, 102 anos. Parece segredo, não sou. Eu mando sempre, sempre.
Fasting is such an interesting part of the longevity conversation. And ask the question of, well, why are these people living so long?
Fasting has been done for thousands of years, of course, but we now have to move away again from these ideas of eating or fasting. They both mean very little. I've seen 110 healthy, but it's not going to be doable for the entire world population. It's going to be doable, I think, for the people that listen and follow all the right moves.
November 8th, as Americans decide the future of Congress and state legislatures, Bloomberg will be live in Washington, D.C. to cover the results as they break and provide insight about what it means for the country.
We're in a divided country, and these are really close elections.
We take a look at what the races could mean for Wall Street.
Special election night coverage starts at 8 p.m. on Bloomberg Television and Radio. And tune into Surveillance live from D.C. at 6 a.m. on Wednesday for the latest overnight. This is Bloomberg.
After the midterms, and this next 6-month period of time tends to be the best season for equity markets.
You don't want to take money out of the market here.
I want to see if this rally ends here because this is a significantly lower high.
People have been, for the most part, underinvested.
I think the real challenge is finding out what is the least painful way of addressing inflation right now.
Many people in a midterm election year don't agree that we're in recession now.
We still think that there's some pain in front of us, and so we think this is really more of a good time to reposition.
Those are some of our guests weighing in on how they expect markets to react to the U.S. midterms, which takes us to the question of the day: what is the midterm trade? Joining us now, Katrina Dudley, Franklin Mutual Advisors investment strategist and portfolio manager. Joining us now, Katrina, midterm trade, what is it?
Look, let's just be honest about what drives markets, and it's profitability. It is not the elections. The elections are a coincident indicator, but we really need to look at what those policies mean in terms of underlying profits of companies. So first of all, I think it's pretty much given that the Congress is going to change hands, and the question is really in the Senate. The likelihood, though, is that we're going to kind of have a mixture of Republicans and Democrats in charge here. And some of the things that we look at are the Inflation Reduction Act and whether or not maybe that gets overturned. But there's so much political will and so many good policies contained in that I think that we've got so many drivers of the market going forward and really not a lot of resistance to making any change to that act and the good changes that we see coming ahead.
In terms of what else could be reducing inflation, let's just talk about government spending. As we were discussing in the last segment, government spending has been a huge factor in terms of how inflation has developed. Do you think government spending will be lower? Do you think fiscal policy will play a less important role going forward? And if so, how do I pivot around that?
What we saw during the pandemic was that monetary policy was transmitted into the economy through fiscal policy, and a lot of that was through the handouts. What we have seen, and someone smarter than me indicated, is that when you have a helicopter that drops a lot of money from the sky, you will have coincident inflation, but with some part of a lag, and that's what we're seeing at the moment. Obviously now we don't have such that kind of helicopter just dropping those large amounts of money out of the sky. And what we've got is more tempered policy, and it's policy that's really aimed at making investments that will make America competitive going forward. And I think that that's really important, because as we look at the market and we look at it as a discounting mechanism, I think there are a lot of positive things that are happening in the United States that are investable themes, and that we will have this tempering of inflation, which is a result of these forces going away, as you said, not having as much fiscal stimulus, as well as having some really good policies. Yes, they are fiscal stimulus because it's government spending, but it's in a much more targeted and direct way.
Katrina, on that point, let's just hit on energy for a moment. If there is a divided government, you maybe see the windfall tax thing really taken off the table. Maybe we see more legislation about more drilling and drilling on federal lands, et cetera. Is that a tailwind for the energy industry? Or is sort of like the quote-unquote damage done in terms of how DC is going to deal with the energy guys?
I don't think that we will see a windfall tax. If you just look over what's happened in the UK and you look at the reaction that they've had, that is the first kind of check mark against this, that we think it won't happen. The other thing that I don't think people are aware of is that the Inflation Reduction Act was energy agnostic. And so it didn't actually favor one type of technology over another technology in terms of solving our long-term energy crisis and shifting us into more sustainable and more environmentally friendly sources of energy. So I think that we have this optionality that's being created in the market. It will mean that innovation wins, and that's one of the areas where America has really excelled. We have innovation in our companies, we have an innovative workforce, and we actually see a situation where the U.S. could become an exporter of energy technology to help other regions lower their cost of energy and do so in a way that is environmentally sustainable.
Katrina, does that compensate for the tech turmoil that we're seeing right now in more traditional technology? Is that going to roll off, and what you're talking about in terms of energy tech rolls on? Is that how we should think about this trade?
Look, I think what you're seeing in a number of these technology names that have really adjusted is the fact that a lot of these companies are not necessarily tech companies as we think about them. They're really consumer derivatives, and they're product-related consumer derivatives in many different forms, be it that they're advertising products to consumers or they're actually selling them in the case of Apple. If you take a look at the consumer discretionary sector, you've had the services sector hold in very, very strongly, and you've had the consumer goods part of it trade off. And I think that what you're seeing in the technology sector is a combination of that on the kind of product side or anything related to product advertising. And then you've also had this other element, which we've talked about a lot, which is the idea is when you have rising interest rates, it disproportionately impacts the valuation of any company where the cash flows are just so far out into the future.
Right.
It means that they discount in at a lower rate. So I think the market is being very, very rational in how it is adjusting for the factors that we're seeing happening at the moment.
So to that point, if we've seen a top in yields or we're around a top in yields, at some point, does that make it attractive to buy tech, or do you need to wait for them to actively fall?
I don't think you're going to see rates actively fall in 2023. I think that's more a 2024 type of situation. I'm not necessarily sure either that the Fed is completely done with raising rates. I think that we're looking at probably 50 going into the end of the year and another maybe 25 in the early part of 2023, because inflation, even though we're starting to see signs that it's coming down, it is still significantly higher than when the Fed wants it. And they've been very deliberate in their communication that they will use monetary policy as their tool to control inflation. So once you do have, however, the stopping of the rise in rates or the expectation that it's going to stop, and you have those new rate and that new rate term structure priced into the market, I think you're going to start finding some opportunities in tech stocks where they've priced in this new regime.
Katrina, we really appreciate you jumping on with us. Thank you very much indeed. Katrina Dudley, Franklin Mutual Advisors, investment strategist and portfolio manager. Thank you very much indeed. Still ahead, we're going to talk tech. Apple shares falling after the company says it expects to produce 3 million fewer iPhones this year, thanks to softer demand. We're going to have details of this story next. This is Bloomberg.
Thing in life I've often said is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you will be.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question. That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Countdown to the Close.
Welcome to Bloomberg Crypto.
It's time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. I'm Ritika Gupta. Twitter is asking dozens of employees it laid off last week to please come back. Elon Musk cut close to 3,700 employees last week to slash costs. Bloomberg's learned that some were laid off by mistake and others were let go before management realized they may be needed to build the new features Musk wants. Facebook parent Meta Platforms reportedly will start laying off thousands of workers this week. According to the Wall Street Journal, the job cuts could come as early as Wednesday. Meta has been struggling with growing losses, plus it has been investing heavily in developing its metaverse business. Shares down some 73% this year. And Bloomberg has learned that Apple expects to make at least 3 million fewer iPhone 14 handsets than originally planned for this year. The cutback is due primarily to softer demand for the iPhone 14 and 14 Plus. Apple and its suppliers now aim to make 87 million of the devices or fewer. And that is your latest business flash, Alex.
All right, thanks so much, Ritika. Let's get more on this with Bloomberg's Ed Ludlow joining us now. Hey, Ed, how much of it was demand versus how much of it is a supply issue at this point?
Yeah, it's a pretty equal split, right? Let's start with the demand side and Apple instructing suppliers to lower its production target for this year to $87 million. There's a real emphasis on the lockdowns in China, basically hampering the lower end of the demand curve, right? This, we're told by sources, is a lowering of expectations because the base model iPhone 14 has not gained as much traction with consumers as originally anticipated. There's softness in demand. And then equally on the supply side, the thing that consumers want, the higher end iPhone 14 Pro models, are being restricted in their supply because of the lockdowns and COVID-0 policy in Zhengzhou, a key region for Foxconn's assembly operations, which means going into the holiday quarter, it's a pretty disastrous mix of factors for what Apple's trying to achieve.
Ed, is the product just not good enough? There was always concern around the 14 that it wasn't a big enough evolution. Are we now starting to see the impact of that?
Well, what we're seeing in the behavior of consumers is that they are favoring the higher-end iPhone 14 Pro models. The Pro comes with the sort of higher specification and more, I guess, new features. The iPhone 14 base models, frankly, differentiated very little from the previous generation of handset. It's interesting as well because it represents what we're seeing in the consumer electronics market. There's resilience at the higher end of the market, a lot of softness at the lower end of the market across all handsets, not just Apple, right? Talking about Samsung and some of the domestic Chinese manufacturers as well.
Ed, I'm curious as to if we think the demand is just delayed or is it gone altogether? Because I've been hearing about the super cycle for years at this point from Apple, and I'm wondering if this just pushes it out again, or if we just need to rethink that thesis altogether.
Well, the super cycle was driven by the upgrade to 5G networks, right? And I'm laughing because I used to love annoying John Ferrer of this every morning for the last 18 months on the 5G super cycle. The question is, what drives upgrades now? And to Guy's point, there's not a whole lot of new technological functionality that's doing that. If you look across the analyst community and the reaction, the one note that jumped out at me is UBS, and they basically feel like earnings and sales projections for the fiscal full year 23 are, quote, overly optimistic. In other words, we're not currently factoring in how severe this slowdown in demand is right now. And in particular, in Apple's case, we're not looking at how that will impact Apple's financials going forward. So I think the message from some of the more bearish elements of the street is actually this demand degradation, I suppose, is going to get worse.
Ed, do people spend more money on other stuff? Do you upgrade your AirPods? Do you upgrade everything else if you're not upgrading your phone?
I think that's what was so interesting about Apple's earnings print last week or the week before. I lose sense of time and space, but it was a mixed bag. There was an overall beat because of strength in Mac, but there was weakness in the services part of the business, and in particular, weakness in the iPhone handsets business. You have to remember what Apple's trying to do, which is to encourage users or customers to own all of them, build products into an ecosystem. That hasn't really come true yet.
Ed, you're going to join us in the next hour. We've got plenty more to talk about. Elon Musk making some comments about his views surrounding the upcoming midterm elections. Talking of which, polls, of course, are going to be opening tomorrow. Terry Haynes from Pangea is going to join us to discuss. This is Bloomberg.
price of anything goes up, the consequences reach far beyond what you'd expect. But perhaps most of all, when it comes to food. In 2010, surging food prices helped spark the Arab Spring. Lives were lost, regimes fell, and the consequences are still with us. Once again, food prices are rising, and fast. Energy costs, broken supply chains, and surging demand were just some of the factors that have driven food prices to their first record high since the Arab Spring. And that's all before a war between two of the world's biggest food producers. Ukraine is called the breadbasket of Europe, and taken with Russia, the two account for about a quarter of global wheat trade. They produce more than half of the world's sunflower seeds and oil, nearly 20% of the barley. Now throw in rising energy prices, and processing, transporting, even refrigerating food gets more expensive. Plus, fertilizer production is extremely energy intensive. Less fertilizer means lower crop yield, and prices rise even more. The pandemic revealed how complicated and fragile global trade systems are. Global agriculture, perhaps even more so. Unlike metals, for example, food goes bad. And crops take months to grow and are vulnerable to unpredictabilities like the weather. Rising food prices will be felt everywhere, but the poorest countries in the world will be hit the hardest. And as all these factors compound, the real fear is that record high will lead to record high, and ultimately to a global food crisis with vast consequence.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
How
story.
are you thinking about those dynamics?
About an hour into the U.S. trading session, really can't find a clear footing here for equities. Bloomberg's Emily Grafeo is tracking those moves for us. Emily?
Hi, Alex. Yeah, a little bit of a choppy trading session here. We do still have the S&P 500 higher, but only up about 0.1%. NASDAQ 100 now underperforming as those U.S. Treasury yields move higher, seeing a lot of movement in the shorter end of the curve, and the dollar lower. Still a little bit of risk on today as traders prepare for the midterm elections. We are seeing a number of strategists talking about a bear market rally after the election. Morgan Stanley's Mike Wilson is one of them, but it's going to be a short-lived rally, according to Wilson. Taking a look at some of those individual movers, particularly in the tech space, we do have Apple lower today. This is after they announced they're planning on cutting back the production of their iPhone 14s. Meta, a different story, actually now up over 5%. This is, of course, when they're planning on potentially laying off what could be thousands of workers as early as Wednesday. We're also seeing the ProShares Ultra Pro QQQ ETF. This is a $10 billion ETF. It provides 3 times the daily performance of the NASDAQ 100, had a really big inflow last week, but now coming off as the NASDAQ 100 moves lower. I've been thinking a lot about mega cap technology and their influence on the S&P 500 and the broader market. It's felt like for the last few years, the S&P has really needed those large cap technology stocks to move higher. But you take a look now at the cap weighted index divided by the equal weighted index. As the ratio moves lower, it basically shows that mega caps are having less of an influence on the broader market. Perhaps that equal weighted index now, as the tech stocks get smaller, is where investors want to be when they want that exposure to large cap technology stocks. And one last look at another part of the market I'm watching. Natural gas futures surging, now up over 11% on some news of weather in the Pacific, and we're seeing that also reflected in energy stocks moving up higher. Guy.
As I keep telling Alex, it's all about the weather. Emily, really nice. Thank you very much indeed. Emily Grafeo, great stuff. Okay, let's get back to the politics. Let's talk about what is happening. U.S. midterm elections are expected to usher in a new era of divided government. Polls certainly show Democrats losing control of the House, possibly the Senate. President Biden hit the campaign trail this weekend, trying to drum up support, of course, for his party.
Democracy is literally on the ballot. I've been making this case since I ran. You know, there are more than 300 Republican candidates for state, local, and federal office who are election deniers. These deniers not only trying to deny your right to vote, they're trying to deny your right to have your vote counted.
The president certainly hitting the road and visiting lots and lots of places over the last few days. This weekend, of course, in New York. Anne-Marie Hordern joins us now from the White House, our White House correspondent, with the leaf blowers, I'm assuming, behind her, judging by what is going on. Anne-Marie, New York, red or blue?
I'm battling 3 leaf blowers, actually. So New York is deep, deep blue. And this is why it was so shocking to see the President of the United States Sunday evening before the elections on Tuesday to be in Bronxville in Westchester County, really trying to drum up support for the incumbent governor, Kathy Hochul, who, she took over from Mr. Cuomo, and she would then be the first elected female governor of New York. But he wasn't the only one. We also had former President Bill Clinton, former Secretary of State Hillary Clinton, the Vice President Kamala Harris. They have made stops in New York. And I think that just shows the tone and the shift of the concern of the Democratic Party, the fact that they feel the need to go out to New York. It can also show the fact that there are some individuals and candidates running either state elections or federal office that do not want the president to be alongside them because their constituents view what is going on with the election and they view that their vote as a referendum against this White House.
Anne-Marie, what's President Biden's then schedule over the next, say, 24 hours? And what's his mood on Wednesday?
Well, this evening he's going to be going to Maryland, and he'll be there campaigning for Wes Moore, who looks like he has a very good chance in the polls to be the governor of Maryland. Even the current incumbent Republican moderate, Mr. Hogan, has called Mr. Moore's challenger, the Republican, quote, nuts. So this does look like this could be kind of a fun evening for the president. The president also has an international trip at the end of the week, and whether or not he gets on Air Force One in a happy mood or not will really depend on Wednesday's results. We should also note that we may not have the full composition of what Congress is going to look like until potentially December. Georgia, that Senate race is a key race, and it potentially looks like it could go into a runoff. So there's going to be a lot of questions in the air over the course of the next 48, 72 hours.
All right, Anne-Marie, thanks a lot. Really appreciate it. Bloomberg's Anne-Marie Hordern joining us there. Let's get more here. Terry Haynes, founder of Washington think tank Pangea Policy, says the election is 60% likely to yield an all-Republican majority in Congress. Terry joins us now. First of all, Terry, it looks like we're going to get a House that's Republican, Senate up for grabs. 2 questions. When do we know the result of this election, and how red do you think it's going to be?
Let me answer the second one first, Alex. I think you're going to see a little red. I mean, my prediction, as you say, is 60% likely that you're going to see an all Republican Congress. But I want to caution a couple of things for markets. One is that you may not see a Senate result before the end of the week. There are basically, nine races that are, including the Georgia race, that are very, very close. And, that's almost 1/10 of the entire Senate. So, I think you're going to end up seeing at most a Republican Senate of maybe +2, +3. So they pick up a few. But if it's even closer than that, you may not know until the Georgia runoff on December 6th. So I caution a couple of things. One is that it's very unlikely that you're going to see anything right away. I mean, so markets won't get instant gratification or the clarity that they really want early. Secondly, that Republican majorities really aren't control their majorities. And as I often say on your air, think of the parties as factions more than anything else. It's going to be hard for Republicans with small majorities to coalesce around things, just like it is and was for Democrats. So, you've got those problems.
Terry, is this election in any way going to be contentious? Is there going to be a problem with any of these results?
I expect you'll see a few recounts. I don't think there'll be any major problems. A lot of what's been said here over the last week in particular is that, any desire to want to enforce existing election laws comes down to voter suppression. That's certainly rhetorically overblown, and I think really doesn't affect the races in any way. I expect the races to be done fairly. I expect the states to take their time and do it right. Pennsylvania, one of those close races, the Secretary of State of the Commonwealth is already saying that the races will take a few days to sort out. So that gives you kind of an empirical idea to support what I just said about a lot of these races taking a while. But I don't expect them to kind of blow up into full-blown slanging matches.
I hope you're right, Terry. I really do. Lori Calvasina over at RBC was saying, the redder the wave, the bigger the market rally. Do you agree with that?
Well, in the abstract, sure. One thing I would caution anybody that's looking at this is that I don't think there's going to be a really huge wave. The wave talk is rhetorical. It's meant in large part to stoke turnout. For Republicans, a red wave is a big talk. For Democrats, kind of avoiding a blowout, means they've survived to live another day with, not really that much harm. And both of those results, are ones they've been preparing for some time. I think what you'll end up with is a Republican majority of roughly 20 seats in the House and 2 to 3 in the Senate, which always looks big to markets. But when it comes down it'll be traded that way. But when it comes down to governing in a couple of months, it's not going to look like it's anywhere near able to accomplish as much as markets think today.
What does that scenario mean for the Fed, Terry?
One thing I think it means for the Fed is they can continue to go on and do what it is that they're doing. My contention all along has been that the Fed leadership and the 5 of the 7 governors that were confirmed or reconfirmed this summer needed to keep their heads down until they were confirmed. And basically about 1 minute after they were confirmed, they moved in the hawkish direction that they continue on today. You see Democrats in the Congress right now, Chairwoman Maxine Waters being the most prominent of them, complaining that the Fed's going too far on trying to tamp down inflation. I expect Republicans to cheerlead the Fed along a little bit and support what they're doing, frankly.
Hey, before I let you go, we got a question from a viewer earlier that talked about a split U.S. government, et cetera. Does that lead to another debt ceiling crisis? That's something I've been reading about, too. You're smiling. Did it happen?
I think in the end they avoid that. There's always heated rhetoric that surrounds this. But bottom line is, ever since about a decade ago, when the rhetoric escalated to the potential of a real default, both parties in the end have wanted to avoid that. I continue to expect that to be avoided. But markets should anticipate getting rocked a little bit as the arguments go back and forth.
Terry, always great to catch up. Really useful to get your insight as we head into voting tomorrow. Terry Haynes, Pangea Policy founder. Coming up, more than 100 world leaders are in Egypt for the United Nations annual climate change summit. We're going to look at what corporate leaders are doing to solve some of the climate crises that we see around the world. Microsoft's President Brad Smith joining us next. This is Bloomberg.
Difficult for all types of companies to find employees lately. Many people with disabilities who aren't working could be working if only given a job. About 20% of people with disabilities are employed.
Right now we're in an environment where there is a war on talent out in the marketplace. Every employer out there is struggling to find people to come into their shops and to find good, hard-working, dedicated employees. We have found through this program and other ones like it that we have within the organization that these individuals are looking for meaningful employment.
People with disabilities want to be able to live, work, and recreate in the community the same as everybody else.
Many of us identify ourselves right away by our job title. That's an important part of our image of ourselves. So that's true for all of us, whether or not you have a disability.
Hello, I'm Emma Barnett, and I'm a journalist and presenter. This is my new show, Emma Barnett Meets. First, I'll be meeting Chinese artist and dissident Ai Weiwei, and I'll talk to the novelist and political scientist Elif Shafak. Tune in to watch those who shape our world explain how the world shapes us. This is Emma Barnett Meets on Bloomberg Quicktake.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
A lot's happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
We think that's the next secular shift.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Keeping you up to date with news from around the world, here's the first word. I'm Ritika Gupta. Ukraine's President Volodymyr Zelensky wants Iran to be punished for helping Russia. Zelensky said if it wasn't for Iran supplying weapons to Russia, quote, we would be closer to peace now. Both Ukraine and the US say that Russia is using Iranian drones in the war. The northeastern U.S. is hurtling towards a winter heating crisis. Heating oil delivered to New York is the priciest ever. Retailers in Connecticut are rationing it to prevent panic buying, and there are warnings of a natural gas shortage. Add it all up, and northeastern consumers face the highest energy bills in decades this winter. And Europe's dash for gas in Africa looks likely to become a heated issue at the climate change talks in Egypt. One activist says Africa won't accept energy colonialism. The EU's been accused of using the continent as a gas station as it seeks alternatives to Russian oil and gas. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Alex.
All right, thank you so very much, Ritika. So Microsoft President Brad Smith is also in Egypt for COP27. Bloomberg's Emily Chang is in San Francisco, and both of them join us now. Emily, I'll kick it over to you.
Alex, thank you so much. And Brad, thank you for joining us all the way from Egypt. You're, of course, leading Microsoft's COP27 delegation there, and I know that your climate fund is now about halfway through. So far, what have you learned? What's worked and what hasn't?
Well, I think, to me, the number one lesson from our Climate Innovation Fund, which is a $1 billion investment fund, as you know, Emily, is really that we're on the cusp of a huge transition as a global economy. In part, the carbon and climate transition is an energy transition. So that means that new technologies that are bringing better renewable energy online are really important to the future, and hence you would say good things to invest in. That includes not only sources of renewable energy, but things like sustainable aviation fuel, another area where we've made an investment. There's a whole variety of other climate technologies that clearly are going to be the big names a decade from now. Nobody has a crystal ball that can exactly pinpoint which one, but we're seeing new markets emerge, and it's not just what we're doing to reduce emissions, it's now carbon removal. Take something like Climeworks. This is a Swiss company that we both invested in and are purchasing from. It is innovating in what's called direct air capture, technology that takes air, removes carbon, deposits carbon underneath the earth. It's just an indicator of how much technology innovation is part of all of this.
Now, you've hired researchers in the Global South to combat the sustainability skills gap, if you will, and you've made this pledge to try and help parts of the world disproportionately impacted by climate change. What else specifically are you doing there to close the climate divide?
Well, first of all, I think it's really important to think a little bit about the problem that we and others are trying to help solve. So much of the work that is needed, especially to adapt to climate change, really involves better use of AI, more data, better predictive modeling. You look at predicting wildfires, whether you're in the United States or India or in Africa. If you look at things like responding to floods, you need to be able to predict these things and then give people early warning systems. Yet, if you look at Africa today, for every 14 data scientists that there are in developed countries, there's only one in Africa. So we've opened up, we're announcing today, 2 new data labs, one in Egypt, one in Kenya. We're partnering with Planet Labs in San Francisco, which is doing, I just think, this extraordinary work with new satellites to bring satellite-based imagery and data, including for Africa. You put our AI capabilities, our data scientists, Planet's imagery together, now we can be a bit of an equalizer. We can help climate scientists on a continent like Africa.
Now, meantime, Brad, the economy continues to go south. We're seeing layoffs in the tech industry across the board. We're expecting thousands of people to get laid off at Meta just this week. I know Microsoft has done some layoffs, but hasn't had a major round of cuts yet. Are you planning to do more layoffs? And how are you thinking about spending, etc.?
I think the most important thing for a company like Microsoft is first to recognize the role that we play. We're not in the advertising business to the degree that some of the other companies are. We're more focused on really providing the digital infrastructure that companies, businesses, nonprofits, governments need. So in a world with increasing economic headwinds, and there are many, the kind of technology that we create is one of the better tailwinds on which people can rely, and we're seeing that. So to answer your question, Emily, we will continue, I think, to manage through this recession the same way we have managed through every recession since Microsoft was founded in 1975. We identify the technologies that will not only be important to the quarter and the year, but fundamentally the decade ahead. And we'll make sure that we invest, and we may even invest more in the technologies of the future, say things like artificial intelligence. Now, we may have to trim some other cost areas because it is a recession, but I think what you'll do is see us trim if we need to, and then use that to free up resources to invest in what we regard as the long-term creation of value, not only for ourselves, but for our customers.
Brad, good evening. It's Guy in London. How carefully are you watching the midterm elections tomorrow? Do you fear that it could have an impact on where you take this business, what your strategy looks like? And I'm wondering whether or not you fear that it could have an impact, for instance, on some of the M&A you're doing. Activision is a name that instantly springs to mind.
Well, I think that the whole merger and acquisitions field is a big issue now for tech companies and more broadly. But frankly, it's more in the hands of the regulators than the legislators, at least as we look at the near-term future. So you look at our acquisition, say, of Activision Blizzard, or you look at anybody's acquisition, and it really is dependent on what does a regulator in Brussels conclude, what does a regulator in London conclude post-Brexit, what did the regulators in Washington, D.C. conclude. I don't think that will be really changed by the election one way or the other, but it is a different political climate, frankly, than it was 3 or 5 years ago. The other thing that I think is just interesting to think about about the election is it's one of many forces. Frankly, the biggest geopolitical development of the year from an economic standpoint is the war in Ukraine. That's what's driving up the energy prices. You were just talking about the price of home heating oil in New York. Believe me, across Europe or in the UK where you are, Guy, it's obviously an even bigger factor. So all of this comes together.
Last quick question, Brad. I know Microsoft has paused political advertising donations to politicians, through the midterms, but given that election denial is strong and that the folks behind it are getting a lot of engagement, have you given thought to whether you continue that past the midterms or not?
Well, it's a really good question, Emily, and we'll have to sit down and decide as we get to January. If there's one thing that I do believe, it's that democracy is good for a market economy, which is indispensable for business, and a healthy business and business climate is good for democracy. And I do think it's important for all of us to think about how we move an economy and democracy forward together. I think we in the business community should feel comfortable saying we believe in democracy in the United States and elsewhere. And frankly, I hope that we'll see politicians, as they look to the future and future elections, sign up for the proposition that if they come up short in the votes, they will concede in the election.
Brad, we know your schedule is incredibly busy, so we really appreciate your time. Thank you so much for it. Microsoft President Brad Smith, and of course, our thanks to Bloomberg's Emily Chang. This is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
I think to be successful in a role like this, it is not only technical knowledge. It is about passion.
They have to love Oreos, right?
They do.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
So, we are approaching the end of the day here in Europe. The close is almost upon us. The time change back to normal. Let's talk about where we are this Monday with European markets. Good corporate results. Here's Ryanair, plus a weaker dollar seems to equal a better equity market performance today. Ryanair painting a very positive picture going forward. It certainly sees higher fares next summer. That's really good news. The dollar's on the back foot, which is quite significant. Look at the cable rate, 114. Stocks up by around 0.3%. Paul Christopher is going to join us from Wells Fargo next. This is Bloomberg.
years ago, this little town became famous for having 5 centenarians and made it to the cover of National Geographic, having 5 centenarians out of a couple of thousand people.
Io 102 anni. Qual è il segreto? Non lo so. Io mangio sempre semplice.
Fasting is such an interesting part of the longevity conversation. And ask the question of, well, why are these people living so long?
Fasting has been done for thousands of years, of course, but we now have to move away again from these ideas of eating or fasting. They both mean very little. I've seen 110 healthy, but it's not going to be doable for the entire world population. It's going to be doable, I think, for the people that listen and follow all the right moves.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
The best question I get all night.
Bloomberg. Top experts. Great questions.
Monday, the 7th of November, European equities in aggregate are bid today. Travel and leisure stocks, both travel and leisure, driving the trade. The countdown to the close starts right now.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
So European stocks pushing higher cautiously today. We're up by around 0.3% on the stock 600. We are seeing a number of different sectors doing the heavy lifting today, but travel and leisure is one that stands out. It's not just travel, it's also leisure. So you've got names like Ryanair out with very strong numbers and very, very optimistic outlooks being delivered by some of these companies. Ryanair certainly no exception. Michael O'Leary, MOL, sounding very positive about next summer. That stock rising. We'll talk about that a little bit later on. But you've also got stocks like Flutter doing well. The betting company having a good day too. The other factor in the mix of all of this as well is we've got a weaker dollar today. Look at the pound. We're approaching 115, 114.62. We're up by 0.7%, Alex. The dollar on the back foot, a huge factor in all of this.
Yeah, so interesting too, considering we get that hot jobs print. You also have CPI Wednesday coming out. All right, let's get to the U.S. market. S&P is up just 0.3%, but it's kind of been bing bong and all over the place. Here's maybe the why. Lori Calvasina, RBC, says the bigger the red wave, the bigger the equity market rally. Mike Wilson says a split government is actually going to be good for the bear market rally. Then you have Julia Manuel over at Evercore said if we don't get the results right away, you should see more volatility and maybe potential downside. What do you make of that? No idea. And that I feel like is what the market is trying to make peace with going into the midterms tomorrow. You talked about travel and leisure. Expedia down 6%, getting some downgrades, getting some price target downgrades, and it's kind of weighing on a lot of the travel and leisure stocks here in the U.S. You mentioned the weaker dollar, despite the fact we have higher yields. There's something going on here. Morgan Stanley calling the top potentially in the dollar, looking to emerging market currencies. But when you have bips, you have a 5 basis point rise in the 2-year, it's hard to understand if we've really seen a top in the dollar, Guy.
And I think you've got to kind of put on top of all of this what is happening with positioning, what's happening with sentiment around all of this. And we got an indication around that today out of Europe. Investor confidence in the region potentially getting past its worst. The euro area Sensex index rose to negative 30.9 from negative 38.3. The range was kind of negative 40 to negative 30. That sounds grim still, but we're starting potentially to find some stabilization. And you think about where European equities are right now, certainly versus their US brethren, trading on very low valuations. Does that, as the economy slowed down, maybe soften the blow maybe give opportunities for investors to think about what is happening in Europe. And I know that there are some big challenges facing Europe right now. The energy story, obviously what's happening in Ukraine, huge factors that we need to think about. But are we starting to potentially see some optimism maybe taking a step too far, but maybe an end to some of the pessimism? Paul Christopher, Global Market Strategist at Wells Fargo Investment Institute, joining us now from St. Louis. Paul, let's talk about what is happening here. Investor sentiment, particularly in Europe, feeling pretty bleak right now. But in some ways, you could argue that could be a good thing. How close to the bottom are we, do you think, when it comes to investor sentiment?
In Europe, we don't think it's a good bet to take right now. Look, there's still the winter to come. That's going to be the real key for Europe. If those natural gas inventories can hold up, and if you get 2 to 3 weeks of really bad winter weather, that will be the key. It's too soon yet. There's still too much of that spillover from the U.S. where if the Fed is almost done hiking, maybe the dollar comes off its peaks a little bit, and then people start buying European stocks. Too soon to make any sustainable rally in Europe.
Hey, Paul, if the weather's warm, do you buy Europe? Like, is it that simple?
Well, yeah. Well, there's more to it than that, of course. We're also watching Chinese exports and Chinese imports, and both of those indicate to us that the world is really heading for a stall here. And it's difficult for us to imagine how you come out of that stall as an investor if you can't get those European big manufacturers and big banks going again. So it's going to be the winter weather is one big factor, but I think the longer term factor, looking beyond the next couple of months, is really what happens with the global economy in 2023. We still think the U.S. is the place to be.
Okay. In terms of, therefore, what you want to do you allocate anything to Europe right now? Do you continue to withdraw money for Europe right now? If you are withdrawing money right now, what do you do with it?
Yeah, great question. So we would take any sort of a bear market rally, like we think this one is in Europe. We would take the opportunity to sell off, especially something that you've been looking to get rid of, bring that money back to the U.S. You've got two choices. If you're a conservative investor, you can go and barbell in bonds. 470 on the 2-year is a great yield. But you could also think of the 10-year at somewhere near its high, ultimately. So you could be putting money into either of those places. If you're more of an equity investor, we would stick with U.S. large and mid caps, and we would stay with healthcare and energy. They've done really well. And yes, I know it's been beaten up badly, taken out behind the woodshed, yes, but tech. We think there are going to be some real values here going forward.
Before we get more specific on that, just quickly, when it comes to central banks, what kind of ECB rate hike forecast versus the Fed does this call also imply?
Well, it's going to call for more ECB rate hikes than you're going to get from the Fed, and that may help the euro a little bit to recover. But it's going to really damage the European economy, being hit by the Chinese slowdown in imports, hit by energy, hit by the very still strong dollar, and then hit by higher interest rates. So we just don't think that 2023 is going to be a year where we want to look to Europe first.
Paul, what would change your view on Europe? Question from somebody watching, question from one of the audience. If we were to see a significant situation change in Russia, if Vladimir Putin was no longer to be pulling the strings, if the war in Ukraine was to come to an end, how much of a coiled spring could Europe be?
Yeah, that could be a real game changer. And in that case, we would shift all of a sudden to perhaps generational buying opportunities in Europe. We just don't think that's going to happen.
Playing the game, if it did, I mean, at some point we're going to get to a spot where it's going to be good to invest in Europe. When that happens, where are you looking in Europe?
Well, we'd be looking at, if I'm going to play the rest of that scenario out, it's going to mean that the global trade is recovering, that we're in a global recovery, that is to say. And I think that will start to happen. We think that will start to happen later in 2023 and into 2024. And where we'd be looking to invest would be the financials, would be the large manufacturers, would be the big multinational exporters that tend to drive European markets. And would also be maybe taking a look at the small cap, maybe services, to see how well that would be recovering in Europe at the time. But first check would be the big multinationals, the exporters, and the banks.
Paul, let's come back to what you were talking about just a moment ago. Bond investors versus equity investors. I'm looking at the credit markets right now, and I'm seeing some pretty incredible yields being generated, certainly by recent historical standards. Why do I want to buy equities when I can get yields like I can now get in the credit markets? And where does that leave areas of the equity markets like utilities that are meant to be effectively yield generators?
Yeah, that's another great question. So we do have some favorites that I mentioned in terms of U.S. equity sectors. But right now, we're basically balanced between stocks and bonds. And again, for conservative investors, you have to think about the investor's risk tolerance. A long-term conservative investor here, we'd probably put the money to work first in the fixed income market. And then a more aggressive investor, that person could actually start thinking about staying with some quality sectors and looking for some opportunities in the coming weeks. We think you'll start to see them once the Fed gets to a terminal rate. We think you may start to see some opportunities to buy more broadly in equities. It's just not quite time to buy broadly yet, to buy risk.
So, Paul, a big rush out of equities into fixed income that some are talking about, you don't think that is in the cards?
No, not really. I mean, I think you'll still see some people worried about yields, about inflation. It's going to take inflation a while before people feel comfortable buying fixed income, but we think yields are near the peak here, and we would be using some cash here. Again, differentiating between conservative and more aggressive investors, now is an interesting time to be putting some money to work, especially short term.
Hey, Paul, super appreciate it. Thank you so much, Paul Christopher of the Wells Fargo Investment Institute. Such a pleasure to get your perspective. All right, coming up, European finance ministers gather in Brussels today. Topping the agenda, fiscal policy and energy subsidies. We're going to get the latest next. This is Bloomberg.
It is very possible that we are peaking. We now see central banks very united on fighting inflation is top priority, and rightly so. If we don't succeed, it would be anchor, and then the foundation for growth, which is price stability, is dented.
Thing in life I've often said is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you would be.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
season is here.
The earnings are starting to pour
The
in.
numbers are holding up better than expected.
Sorry, business isn't all that bad.
Bloomberg breaks the numbers first.
Netflix earnings going to cross the wire.
A big beat. Stock is up more than 8%, coming in stronger than their rivals.
With exclusive expert analysis.
Finally back to growth.
The mother of all opportunities.
What is the industry to watch?
That's where the rubber hits the road for Goldman Sachs.
It's going to be a really interesting earnings season.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Fortunately, we're getting our act together in Europe, 1 year too late maybe, but better late than never. And what we see is that we peaked, inflation peaked around July in Spain. It moderated significantly in August, September. In October, we're around 7%. It should continue like that, around that level, and then resume its downward trend next year.
Spain makes no secret that it wants to be an energy hub for Europe. Where do you see Spain in the next 10 years on the sector?
Well, I'd say it's a no-brainer that the Iberian Peninsula, it's not only Spain, it's Portugal, but we can play an important role in ensuring energy supply to the rest of Europe at good, in good conditions, attractive conditions, but also renewables. That's the future. We're really betting on green energy. What we need to ensure is strategic autonomy for the whole of the EU, but insofar as Spain is concerned, we want to have a competitive industry, a competitive economy. Undoubtedly, the Iberian Peninsula should be part of the solution.
Do you fear that Europe could enter a spiral of industrial decline as a result of this energy crisis?
Well, I think we absolutely have to avoid it, and that's why we need to accelerate the decarbonization of our industry. This is a top priority for us. We need to ensure that the industry remains, the industrial capabilities remain in Europe. In fact, we should attract investment into other areas where we have seen we have a vulnerability because of the very long international value chains, such as semiconductors.
That was, of course, Bloomberg's Maria Tadeo, speaking with the Spanish Deputy Prime Minister and Finance Minister, Nadia Calvino. Maria joins us now from Brussels, where Nadia Calvino and other Eurogroup finance ministers are gathered for a meeting. They're talking about energy, they're talking about all kinds of factors. Maria, Calvino painted a more optimistic picture than others. There's a lot of risks for Europe's economy right now. What gives her that reason for optimism?
And it's a good question because, Guy, at this point, there really isn't. The fact that there was growth in Q3, and that is what she's clinging on to, the fact that the European economy was still growing, that's some surprise to the upside. When you look at Italy and Germany, that is good news to some extent. But if you look at the PMI, especially the industrial data that we had last week, what it shows is that a recession is in many ways already happening when it comes to the industry. And also, Guy, I have to say, we put that question to Paolo Gentiloni, who, as you know, leads the portfolio for European economic growth for the EU, and he said, well, the reality is that a contraction in the winter is coming. I think the real question, though, Guy, is just for how long and how deep will this contraction be? Remember, up until a few weeks ago, the European Central Bank did not even mention the word recession. Now, of course, we're waiting for their new forecasts, but it does seem that some have almost internalized this idea that a contraction, they don't use the R word, but that is almost inevitable come Christmas.
Maria, this also dovetails in some ways with COP27. The U.S. and Europe, when it comes to their Inflation Reduction Act and promoting green energy and subsidies, what's the conversation there about that?
Yeah, and Alex, I think you point to what is really the transatlantic tension at this point. You could argue this is an issue where the two should be seen eye to eye, but in reality, the Europeans feel that this act could potentially give an unfair advantage to American companies. They also worry about the impact that it could have on the level playing field. That was something that the German finance minister, Christian Lindner, told me. He said, quote, I don't think the Americans realize just how concerned we are about Biden's Inflation Reduction Act. And then, of course, the French finance minister, Bruno Le Maire, repeated the same thing, which he said, we have to make sure that there is a fair level playing field for both sides and that we protect the European industry. And I think, Alex, overall, that is the issue here. There are some that worry about the long-term implications that this energy crisis will have on the European industry, the fact that potentially leads to a long-term decline, that we could be seeing perhaps the end of the best days of the European industry. And they say, of course, that's something that they have to avoid.
Maria, is it my imagination, or does that room behind you look a little dark? Are they turning the lights down?
Look, Guy, I actually want to check with maintenance here about what's going on in this place, because today it is particularly dark. I actually had to ask my producer whether you could see me or not. In fact, the room is not very well lit, but remember, the European Union has said that this winter you have to be smart about the way that you use energy, and they said, of course, they want to set an example to everyone else. So I would not be surprised if the big lights have been turned off in here, but I can tell you it feels pretty dark. In fact, I was concerned whether you would see me or not.
Well, we do see you, but I think the point definitely stands in terms of the conservation there. Maria, thanks a lot. Great reporting. We really appreciate it, Bloomberg's Maria Tadeo. All right, coming up, let's stay on the energy theme for a moment. The giant Equinor is raising security around its North Sea platforms and pipelines. We're going to tell you why next. This is Bloomberg.
I think it's going to be a tough winter. I think now with the gas storage in place, I think we are, pretty safe. But it's going to be hard for European industry. Prices will be still not very stable. Ukraine will be suffering. We are trying to see how we can support Ukraine in getting gas for their use. So I think it's going to be hard. But I think politically, it has been remarkable during these months that politically Europe has been very consistent in supporting Ukraine.
Names in business are on Bloomberg.
The financial services industry, which is a large part of the UK, is very competitive. But it's not the only one. Health sciences, even technology and fintech are very, very bright stars in the UK.
The market environment is a very challenging one. It's not about blaming the markets. The markets is the same for everyone. And that's exactly how we deal with it.
90% of our clients are indicating we need more guidance. And if they want more guidance, that's why they bring their money to us.
Nobody covers business like Bloomberg, your global business authority.
From New York City,
from London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this
How
story.
are you thinking about those dynamics?
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
It's time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. I'm Ritika Gupta. Philip Morris International will go ahead with the $16 billion takeover of nicotine pouch maker Swedish Match. The maker of Marlboro's received support from enough shareholders, including the company's largest one, Elliott Management. Swedish Match and its U.S. distribution network would give Philip Morris a foothold in the biggest market for alternative smoking products. Ryanair has lifted its passenger goal for the year and downplayed the likely impact of a recession. Europe's largest discount airline said earnings should top $995 million. Ryanair also predicted that people will trade down to the lowest available airfares rather than give up on traveling. And one of England's most successful football clubs is now on the market. Bloomberg's learned that the US owners of Liverpool FC have put the team up for sale. Fenway Sports Group is working with Goldman Sachs and Morgan Stanley to gauge buyer interest. In a statement, the owners reiterated that they would consider new shareholders if it was in the best interests of the club. And that is your latest Business Flash. Alex.
All right, thanks so much, Ritika. So we just talked to Maria about turning off the lights to conserve energy. Well, European energy giant Equinor talked about the process for new renewable infrastructure, including offshore wind parks, for example, all to help the energy transition. At the same time, the company is dealing with security risks. Now, Francine Lacroix sat down with the new CEO, Anders Opedal, earlier at COP27, and they talked through some of the issues confronting the company.
It makes a lot of sense to establish a good relationship between countries and Norway now for securing gas for longer term. And we have also offered countries the fixed-term, long-term contracts as well to ensure that the prices stays at an affordable level, and we also have energy security to start executing the project. We see that all around the world, that the time to plan it takes longer than actually executing it. So this is where we need to attack, and that's why I'm here.
All right, here to talk more about this is Bloomberg's Rachel Morrison. Hey, Rachel, there's a couple things to unpack with that. But first, let's start with the energy security part when it comes to, say, long-term contracts. How successful right now is Europe in securing these? Because last time we talked, I feel like countries wanted shorter long-term agreements. Companies want longer-term agreements. Are they meeting in the middle right now?
I think that still seems to be the case, that really to get energy security, you do need a long-term contract, but that isn't really in keeping with the energy transition. So we know that particularly Germany is struggling with that when it comes to LNG supplies. And we haven't seen much movement on that, but I think, as you say, there needs to be some meeting in the middle. And even 10 years doesn't seem to be long enough for some of the producers. They're looking to more 15-year contracts, which is longer than Europe really wants to go at the moment.
I feel we're in the false dawn at the moment here in Europe. It's still quite warm outside relative to how it normally is. Many people I know haven't put their heating on yet. But as we've seen in the United States over the last 24 hours, the prospect of a cold snap and suddenly gas prices shoot sharply higher. What do we know about when this warm weather is going to end? And what are traders telling you about kind of what happens over the next few weeks? Do we suddenly... Does this all flip on its head like we're seeing in the States right now?
Yes, I mean, even if the weather stays milder than usual, at some point it's still cold. You still need the heating when it gets to 5 degrees, even if it's usually supposed to be, 2 degrees. So at some point we will need heating, and that demand level will shoot up. What people are waiting to try to figure out is how much demand reduction is coming on top of the heating. When we get back to normal levels, how much are people turning off the lights? How much is industry not using fuel? So trying to figure out that demand reduction number to see where it comes out is what traders are looking at the moment. And looking places further north in Europe, we can see that those demand reduction looks like it's quite big, even when you take the heating out of it. So that will be interesting to see once the weather kind of levels off a bit.
Yeah, talk about weather, guys. It's 80 degrees here in New York. That's bananas. It's not going to be 80 degrees tomorrow. It's going to wind up being a lot colder. The Northeast is going to have a really hard time with heating oil over the winter as well. Rachel, if we have a heating crisis in the Northeast, what happens to you guys over there?
Well, it'll be interesting for gas supply, for LNG. So that's what really has been helping Europe so far, that it hasn't been cold in Asia, that the US has been exporting lots of LNG. If that picture changes, then that does change the global gas market dynamics, and that's what we will see. That's when we'll see prices spike, and this kind of bearish market that Guy was describing, we see that turn around whenever demand rises, and it rises everywhere. It'll be global competition for gas, which is what we know will drive prices back to those really high levels we saw in the summer.
Great stuff, Rachel. As ever, thank you very much indeed. Bloomberg's Rachel Morrison on what's happening with the energy story. It may not be cold yet, but it is certainly raining a lot. But it's England. It rains here. I'm trying to tell my wife that. Okay, let's talk about the European markets. Let's talk about what is happening here. Heating's not on yet. I'm going to point that one out. Maybe by the end of the week it might be. FTSE 100 down by around 0.5%. It outperformed Friday. The DAX is doing well. The CAC's absolutely flat right now. The close is coming up next. Travel and leisure is doing well today. I have to say, Ryanair, a real standout story. We'll hear from Michael O'Leary, MOL, the boss of that business. He's coming up next. This is Bloomberg.
incredibly difficult for all types of companies to find employees lately. Many people with disabilities who aren't working could be working if only given a job. About 20% of people with disabilities are employed.
Right now, we're in an environment where there is a war on talent out in the marketplace. Every employer out there is struggling to find people to come into their shops and to find good, hard-working, dedicated employees. We have found through this program and other ones like it that we have within the organization that these individuals are looking for meaningful employment.
People with disabilities want to be able to live, work, and recreate in the community the same as everybody else.
Many of us identify ourselves right away by our job title. That's an important part of our image of ourselves. So that's true for all of us, whether or not you have a disability.
Bloomberg is live at COP27 in Sharm el-Sheikh, Egypt. Bloomberg Television and Radio brings you continuing coverage as world leaders, business insiders, and decision makers gather to take action toward achieving the world's collective climate goals.
What are your top 3 priorities?
There is an ability always to find the new and innovative ways to meet the challenge and at the same time take into consideration the pressures that exist.
Special coverage continues only on Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
So we're wrapping up the session here in Europe. We're back to the normal time. This is the picture. You've got the CAC 40 absolutely flat. It benefited Friday on the Chinese story with the luxury stocks doing well. London benefited Friday with the commodity stocks doing well. Some of the banking stocks and names like Shell, etc. Some of the big commodity stocks coming under a little bit of pressure today. You've also got names like HSBC under a little bit of pressure, as a result of which London is underperforming. The CAC's flat. The DAX is up by around 0.5%. The FTSE MIB's up by around 0.9%. Telecom Italia, the standout story there. In terms of how the market has developed, much more of a cautious session, as you can see. Bit of a move up first thing, continuing to price in the Chinese narrative, and then we've just gone sideways. We're waiting for the midterms. We're waiting to see if there's any volatility there. We've obviously got the CPI print coming up as well later this week out of the United States. So maybe a little bit of caution justified. Let's talk about how we've looked from a sector point of view. Travel and leisure is by far and away the standout story today. So you've got a couple of different stories in here. Ryanair, very positive. You've also got Flutter looking very well over in the United States with a ruling. I'll tell you about this in a minute. With a ruling coming through from an arbitrator related to FanDuel. Basically, those two stocks helping the travel and leisure sector out very nicely. Food and beverage, the luxury sector, that's where the underperformance has come through today. But some outperformance coming through there Friday. So a little bit of an unwind as a result this Monday morning. Let's talk a little bit about some of the single stocks. I've pretty much given the game away, haven't I, talking about what we need to focus on here. Telecom Italia, up very nicely, 10.61%. Vivendi is in talks with the Italian government about basically creating a single network for phone lines in Italy, and you'd basically fold in Telecom Italia into that process. It's giving a real lift for Telecom Italia because you could see a higher valuation. Flutter. So let's talk about FanDuel. You've got FoxBet. Fox basically looking to exercise its, near 20% option of a stake in this business. There's been a concern about valuations. Got an arbitrator's ruling. It looks like it is a much higher valuation than certainly Fox was looking for. That's good for Flutter, and basically also gives you an idea about how potentially underpriced its ex-US assets are. So Flutter trading up quite nicely on the back of that. And then, Alex, there's Ryanair. Michael O'Leary sounding very positive. This is a low-cost carrier. He talked about the kind of the Aldi effect. People are maybe trading down, the Walmart effect, I guess you would call it over there. He's also painting a very positive picture about what next summer will look like. He's talking about higher fares. Now, that isn't what most people expect, given the cost of living crisis. But Michael knows a thing or two about what's happening in the airline sector, and the market responded very strongly today. Stock up nearly 4%.
Yeah, I found that really interesting. It contrasted with some other airlines that we've heard from. So let's get more on it. Ryanair CEO Michael O'Leary spoke with Bloomberg's Manus Craney and Danny Berger in London. He talked about the visibility into the holiday season.
we've seen very strong forward bookings and fares into the October midterm, school midterm. Christmas looks very strong. Next Easter already, next summer looks strong forward bookings. But we'd be cautious into this winter again. Everything looks good. I mean, what's unusual is this time I think we're going into a recession with full employment. People do seem to be spending, and they're certainly traveling. But I think last winter we had Omicron, the COVID variant at the end of November, it crushed Christmas. We had the Ukraine invasion in February, crushed Easter. So I think we should still be cautious. It's fragile, but all the signs, certainly in the near term, are strong, particularly for short-haul European air travel.
Fares are up 7% on pre-COVID levels. You talk about the fragility there. Is there any fragility in fares, or are you still able to robustly price, strongly price, and hold that 7% gain?
I mean, I'm pleasantly surprised by how strong it is. I mean, in the second quarter, which is that key July, August, September quarter, underlying airfares are up 14% on pre-COVID. Volumes are up 11%, and it's very rare in this industry you get volume and fare growth. I think there's been a structural change post-COVID. So much capacity has been taken out of the system. You know, BA, Wizz, EasyJet, none of them are back at their pre-COVID volumes. We are. In fact, we're 11% up on pre-COVID. But into the autumn, when we expected things would tail off, it still seems to be strong. And I think that's because most of the European short-haul airlines are cutting back capacity this winter. They're not well hedged on fuel. Ryanair, we're over 80% hedged at $67 a barrel out to next March. So we're strong. We're still growing. We expect to add 10% capacity to our pre-COVID volumes this winter. And so far, we've been very pleasantly surprised. But we're cautious that things could still fall over if there was a negative development on COVID or in Ukraine, as there was last winter, and therefore I think caution is the right way to be.
You mentioned there you're hedging on fuel. You're ahead of your peers there. You're even 50% hedged for fiscal year 2024. You talk about structural changes. Is this a structural change for the industry? Just fuel hedging because of the scars from this period as Europe goes through an energy transition? Are you and your peers now looking at fuel hedges differently than you did before?
I don't think so. In Ryanair, we've always hedged. But if anything, I mean, we're very strongly hedged out to the end of this fiscal year, March 23. We're 50% hedged to March 24. But I'm a little bit cautious. I don't want to be 100% hedged at $92 a barrel because I think there's as much risk that oil will fall below $90 a barrel into next summer or that it will rise to $120 a barrel. The situation is just too uncertain. I think we're comfortable where we are. Well, and the bigger challenge for the airline industry has been the strength of the dollar. Like we're hedged, we've hedged all of our aircraft capex out to 2025 at $1.24 to the euro. So we're in a very strong position. Most of our competitors are not hedged on the dollar. So much of the airline costs are in dollars, fuel, spares, aircraft. And so actually, if anything, it's the stronger dollar poses a greater threat to airline profitability in Europe in the next year or two, as much as oil.
Ever well, Michael O'Leary, Ryanair CEO, talking a little earlier to Bloomberg's Manus Cranny and Danny Berger. For more now on Ryanair, on what Ryanair means for the rest of the sector. Alex Irvin, Bernstein, European transport analyst. He's got an outperform rating on Ryanair. He's got a price target of $16.80. Alex, Michael talks a positive story. He always does. The question really is, looking forward into next summer, is he right?
It's hard to say so early on, given the limited visibility that we have the next summer. Very few customers will have booked for their travels yet. I can see a situation in which this does indeed take place. According to a bit of luck, as Michael said, on the macro situation, on COVID, on Ukraine. We're seeing the narrow-body deliveries getting delayed. That probably helps the supply-demand balance a little bit. And if we get inbound tourists from other regions coming to Europe and wanting to fly intra-Europe, I can see a world in which that is possible. Equally, I can see a world in which that doesn't happen in case any of those doesn't really play out the way that we're hoping.
I gotta say, Alex, like the way you're talking, it seems like a lot of things have to go right for Michael O'Leary's version to come true. And I'm wondering what the stock is priced for.
I mean, the stock is priced for none of this, actually. If you look at where Ryanair is trading at the moment, kind of the 12, 13 euro range, that's well below where I thought we would ever see it again pre-COVID. Now, if you're looking at this company doing 200 million plus passengers on, say, €2 net income per passenger in a couple of years' time, you're very quickly getting to a level of EPS that probably starts at the €2, sort of 2026, 2027. So you're putting that on sort of mid-single digit PE, and it used to trade on a 10, 12 times earnings. Other stocks in the sector are even cheaper. So they're priced for a lot more of a bleak scenario than we're talking about today.
This summer, we've seen a lot of Americans in Europe. They're here because their purchasing power is unbelievable, potentially a once-in-a-lifetime opportunity. Alex, how does Ryanair benefit from that? If we see the same thing happening again next summer, how sort of big a part of this plan is based on that kind of people coming into Europe and then traveling within Europe style narrative?
It'll certainly help. More of the traffic will be native Europeans traveling within Europe rather than the long-haul passenger coming in and then flying around. But ultimately, your airfare is dependent on the supply and demand balance, and that is quite fragile. Right? A little bit extra demand, a little bit extra supply can push it one way or the other. The more international inbound passengers that we have, particularly this year with the strength of the dollar, and possibly next year with Asia opening up and finally being able to come more easily to Europe to travel around, right, that helps airfares across the sector, Ryanair and all the other short-haul airlines in Europe.
Hey, Alex, we were talking to Travago last week, and he talked about how people are still traveling, but they're sort of trading down from like the top-tier cities to the next rung down, et cetera. And I'm wondering if that's the case, especially if we enter a recession or the cost of living crisis still continues. What airline benefits the most from that kind of trade down?
Yeah, there's two airlines that will benefit from that, and that's Ryanair and Wizz. First of all, they're the lowest cost, lowest fare airlines in Europe. The second thing to also think about is where they fly. So if you're wanting to save money on your holiday, do you go to an expensive Western European city anymore? Or do you maybe go to somewhere that's maybe slightly less expensive in Eastern Europe? You take your holiday there, the hotel costs less, meals out cost less. Because let's face it, the airfare is only maybe 10% of your holiday. The destination is going to matter probably a lot more.
Final quick question. Capacity has come out. Does more come out? Are we going to see further consolidation within this industry in Europe? You've got ITA potentially being consolidated, TAP being potentially consolidated. Who knows, maybe even EasyJet potentially being consolidated. In that kind of scenario, again, is it Ryanair that benefits the most?
If capacity comes out of the industry, everybody benefits. And there's two ways in which capacity comes out. Either planes leave the market, which is actually capacity coming out. And in that sense, right, if we have a tough winter, if we have airlines failing, then Ryanair will be one of the airlines that picks up the pieces, that finds space for its planes on attractive routes. If there's simply M&A going on, right, let's say ITA ends up part of a larger airline group, TAP ends up part of a larger airline group, EasyJet, in your example, ends up part of a larger airline group. If the planes don't come out of the market, that does nothing for the supply-demand balance at all.
Yep. But I guess you would probably want to be managing capacity. Maybe it's the back office. Maybe that's where you get the benefit of that kind of consolidation. Alex, we'll wait and see. I think it's going to be a really interesting winter. Michael O'Leary, I guess you've got to be positive to be an airline boss. He certainly is. Alex, greatly appreciate it. Thank you very much indeed. Alex Irving, Bernstein European Transit Analyst, thank you very much. Little tick lower during the auction, not much really to write home about. These are the final numbers that we see here in Europe. London underperforming a little bit, some of the commodity stocks under a little bit of pressure. Paris pushing back up to unchanged, but Germany the outperformer. Plenty still to come. We're going to continue the coverage on the cable show, 5 p.m. in London, 12 p.m. in New York. We're live on Bloomberg DAB Digital Radio. The podcast to follow on Spotify and iTunes, Alex.
All right, coming up. From fired to rehired, Elon Musk is now calling back some of the Twitter employees that he let go last week. The latest from Silicon Valley is next. This is Bloomberg.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part.
This is live stream shopping, one of the hottest trends in China. Every night, tens of millions of people watch live shows hosted by influencers like Via and buy the products they recommend. On e-commerce and social apps like Taobao and Douyin, the sister app of TikTok.
我觉得已经改变了大家的购物的方式。其实各种各样的产品，哪怕你不买，你也可以来看。当然，你看了，你就有可能会买。
It's not about, only shopping. It's about the experience. It's about having fun. You got to see 3D. You got to see in some kind of action. It's almost like a theater act.
The internet craze has taken over China. By the end of 2020, the country had almost 400 million live stream shopping users. China's live stream e-commerce market has also grown dramatically, with an estimated value of $161 billion in 2020. It's becoming popular outside China as well. So, is live streaming the future of shopping? Live streaming is not a new thing. In China, it started in 2015 with the rollout of 4G. And it was first used for entertainment and socializing. Many live streamers performed for their followers or chatted to them, making money by receiving virtual currency and gifts. In the West, live streaming is mainly the domain of avid gamers. In China, it's broken into e-commerce.
China actually has a very big e-commerce empire, so it uses these super apps, what we call, that you have payment, you have search of information, you have recommendation system, and you have huge amount of goods available on the platform, and as well as a lot of consumers. So with this advantage, they merge these features of live streaming to make the influencers actually sell goods.
Here is a perfect choice. Nice neutrals, beautiful print, nothing overwhelming, and the warmth and comfort of flannel. This is item.
Traditional TV shopping involves a one-way direction, whereby a host introduces a product, demonstrates certain things, and say, call this number or something. But live stream shopping is live. That in itself is a very, very big difference. It causes different psychology, and live stream shopping is a very entertaining way of actually engaging someone else.
When you shop, actually, this live streaming video will continue. It will minimize into a corner, and you can buy the items and pay all on the same app. And after that, the live streaming screen will just enlarge by itself, and the promoter will come back to screen. So it's very convenient.
Taobao, one of China's biggest e-commerce platforms owned by tech giant Alibaba, added a live streaming function in early 2016. In the following years, other e-commerce and social platforms like JD and Douyin also integrated this feature.
开头的时候还是有很多的挑战的，对画面的这个流畅，然后是否能够很真实的去还原商品，它其实在这个上面是有很高的这个门槛跟技术的这个卡口在的。不管是我们的这个用户的接受度，还是商家的这个上手的这个难度都很高，但是这几年下来，基本上难点在不断被突破的。
Over $70 billion worth of goods was sold via live stream on Taobao in the year through March 2021. Latest surveys show that over 60% of live stream users in China were watching shopping shows, and over 65% of them shopped at least once via live stream. In 2020, live stream shopping got a huge boost during the pandemic, when millions of people were in lockdown and many retailers were pushed online.
People, during the lockdown, felt like there's a need for more social interactions. This live platform creates an interesting kind of environment that gives people the sense that I'm actually interacting with you. And then live stream shopping brings in a lot more variety of things that people could buy and satisfy, the sense of like losing control, especially during the pandemic.
At the heart of this craze are the top influencers who have tens of millions of followers and sell products worth millions of dollars every night. They often use their star power to get bargains from retailers, which in turn boosts their own sales and influence.
So if you think about China's live streaming, you have to know the king and queen of the influencers. The queen of live streaming, Via, she is actually having the biggest viewership and the biggest sales volume for a long time on Taobao platform. She can sell everything from like Gucci sunglasses, lipsticks, homes and cars. One time she offered her followers to go on a Tesla ride with her, and she even, for once, sold a rocket launch in her live streaming room for 40 million yuan. The king will be Li Jiaqi, more widely known as Lipstick's brother. He used to be a cosmetic sales before he turned into live streaming e-commerce, and he knows a lot about the cosmetics. So he's the one that will actually put the lipsticks on himself when he's on the show.
Top live streamers like Via and Li Jiaqi have become celebrities in China and can earn millions of dollars a year. Although not everyone can be as popular, mid-ranking live streamers like Tiffany still earn a good income through sales commissions.
如果说单从收入方面来讲的话，那主播的收入是比普通的工作要高很多。但是呢，主播这个工作时刻对身体，包括对精神都有很大的一个考验的。就是每天需要集中精力，然后长达5-6个小时，这种状态是很累的。而且这5-6个小时的话，你是脑子是不停的，然后嘴巴是不停的，然后手也是不停的，眼睛也是不停的。像我们做主播，不是说单一的只做直播一件事情，然后还会有选品的一些工作，然后还会有一些其他的事情排在里面，其实是没有个人生活的。那我觉得增强粉丝影响力的话，不是说某一件事情。可能今天做了什么事情你就增大了影响力，而是每天不断的内容的输出，粉丝不断的可能对你的了解，慢慢的信任你。
里面有芝麻酱的味道，如果吃不习惯的话就慎买。
A lot of successful live streamers are generally very good at communication. They're very good at articulating very simply what a product does, what a product doesn't do. In order for them to sell, they need to be trustworthy and appear trustworthy, and they need to, show in some ways that they're authentic, right? So for Via and Li Jiaqi, they are able to articulate that quite a bit through their body language, through what they say. For example, Li Jiaqi will also sometimes say bad things about certain products because to him that's his honest opinion, and sometimes people want to hear that. And so they seem very credible, they seem very trustworthy, and don't forget, they're also very entertaining and very interesting. If you're familiar with Li Jiaqi, he won a Guinness record for like the most lipstick applications to models in like 30 seconds. So if you're able to create a lot of buzz with interesting things that you do, people who may not want to buy lipsticks will also stream in just to watch what he does. And then from there, you might get hooked.
这就是一般女生出门的时候涂的口红的颜色。
Live streamers also use sales techniques such as limited time or supply. This sense of scarcity can often encourage viewers to buy.
The platform in itself creates and enhances some of these things, but you see it live. Something we call social proof has taken over, meaning that, hey, other people are interested, other people are joining in, other people want the same product. And they add it in the chat and they ask questions and they say, oh, I want this too. What happens then? It makes the whole product even more scarce.
But it's not just influencers. Local farmers, luxury brands, even mutual funds have also started their own live stream shows.
Working with very top-tier live streamers can be risky. It's not necessary that the benefits will end up with the brand. So we see company executives opening their own shows. And we see like P&G have their own sales room, which runs shows every day as well. We also have like local governors in like small towns to sell their agricultural products. So the live streaming is definitely transformed the way product owners can think about how to reach their consumers, and it enables a lot of players to actually sell.
live stream shopping is going global. Merchants in Southeast Asia have embraced this trend. And in the West, Amazon has upgraded its live streaming function, adding interactive features like chat rooms. Companies, including Google and Facebook, are also developing and investing in technologies to integrate video and e-commerce.
直播电商它其实已经开始成为主流，它未来的发展空间跟潜力都是巨大的。
接下来大家会越来越依赖这种购物方式，会变成一个比较日常化、比较规范化的这么一个趋势。
If you look at the numbers alone, their numbers alone, Li Jiaxi's numbers or Via's numbers, you know that they can sell and you know that they can generate revenue. Are they able to sustain it over a long period of time? It depends on how innovative they are at changing some of the things that they do.
But you can't expect consumers one day turn into virtual shopping for good. There will be the nature of us that crave to go into the store, to touch the goods and actually wear it and see how it looks like and walk around in that with our friends. And those things wouldn't be replaceable with live streaming.
You could imagine that the oceans are actually the largest battery. We're storing huge amounts of energy in the oceans. The wave motion can be very deep. It can extend down several hundred meters. And once it gets to the near shore, from about 50 meters, the whole water column is moving backwards and forwards.
As we search for ways to reduce our reliance on fossil fuels, some are looking to a largely untapped potential source of renewable energy. In theory, waves off the coast of the United States alone could generate over 2 trillion kilowatt hours of electricity a year, enough to power more than half of the country.
Waves intensify and subside not as quickly as the wind, and that means that it can produce a smoother power generation curve. One of the potential advantages of wave energy is that it could act as a complementary source of power compared to other renewables on the grid if it were to be scaled up to commercial scale.
For decades, engineers have been trying to convert wave energy into electricity, but a host of technological and financial challenges have complicated their efforts.
In the years from around 2006 to 2015, there were a spate of bankruptcies in the sector, and this was largely because of a lack of kind of continuous proven projects out at sea with reliable electricity generation.
Since then, companies have been trying to develop the technologies at a steadier pace and with a smaller cash burn. But the same questions remain. Can companies develop devices and technologies that actually work? Is wave energy just a novelty or something that can become a major renewable energy source?
The sea is a very challenging environment within which to operate a power project. So seawater is corrosive and conditions are very rough. So this means that power projects don't have a very long lifetime, and it increases operating and maintenance costs.
Partly because of that, many early wave energy projects hit rough waters, such as the Palamis Wave Energy Converter in Portugal and the Isla Limpet project in Scotland. But that hasn't stopped others from trying.
Companies are focused on testing projects out at sea, proving their durability, trying to raise capital and bring down cost. The sector hasn't really converged around one single technology design, and companies are kind of undecided about which design works best.
Finland-based AW Energy is a veteran in the sector. The first proof of concept of the company's device was made in the 90s after diver Rauno Koivusaari observed the strong back-and-forth movement of a hatch cover in a shipwreck in the Baltic Sea.
The waves are generated far from the coastline, so the wind blows on the surface of the water, causing the water particles to rotate, and that rotation extends deep down below the surface, and the waves can be very long. They can be several hundred meters long, and as they come into the near shore, this rotational energy turns into an elliptical energy, and eventually backwards and forwards, as you probably noticed if you've been swimming on the seashore in large waves, you're pulled in and out. That's the energy that we're extracting. There's a sweet spot where we deploy, so around 10 to 15 meters of water depth. That's where there's still strong wave energy coming in.
After years of research, prototyping and testing, the company has deployed Wave Roller, a 350 kilowatt device in the waters off Portugal. Wave Roller has an 18-meter wide and 10-meter high steel panel fixed to the seabed via a floatable foundation. The panel moves back and forth with the waves, capturing the energy.
It's submerged in the depth of 15 meters, so it's protected from the extreme waves. We generate electricity by capturing the movement with hydraulic circuitry in a machine room underneath the surface. That hydraulic energy we turn to electricity with hydraulic accumulators and hydraulic motors, and also a generator.
The Wave Roller has survived large waves at sea for over a year and delivered electricity via an underwater cable to the grid in Portugal. Meanwhile, the company has won a €2.5 million grant to work on an upgraded version of the Wave Roller, aiming to increase the electricity generation capacity to 1 megawatt. The upscaled device would have a bigger panel, 2 power takeoff units, and improved software to control the energy production.
We have taken into use a wave prediction algorithm that kind of tells us what kind of waves are coming in to our device. That gives us few seconds to prepare for capturing more energy, and the difference in that is significant.
Our future plans are to deliver technology around the world. So I'm hoping we can be working on delivering technology to projects in Asia and also in the American continent as well.
Meanwhile, Israeli company Eco Wave Power is taking a different approach to capturing the power of the ocean. For the company's founder, Inna Braverman, developing new sources of renewable energy is a personal mission.
I was born in Ukraine in 1996, and 2 weeks after I was born, the Chernobyl nuclear reactor exploded, causing the largest in history nuclear disaster. I was one of the babies that got hurt from the negative effects of such explosion. I had a respiratory arrest and a clinical death. Luckily, my mother, a nurse, approached my crib on time and gave me a mouth-to-mouth resuscitation, which saved my life. I got a second chance in life and decided to do something good with it.
Growing up, Inna wanted to be a politician to positively change the world. After working as a translator at a renewable energy company, she decided to change paths.
Solar and wind energy were fully commercialized. There were a lot of amazing technologies implemented everywhere. I saw that wave energy, although it's an immense source of electricity, the biggest companies in the world are trying to develop wave energy with no success. And there was kind of a race going on in the world of who is the company that is going to develop a viable wave energy solution first.
In 2011, the then 24-year-old Inna co-founded Eco Wave Power. Instead of installing devices offshore, the company's devices are attached to existing breakwaters, jetties, and piers.
Our technology is very cost efficient, especially in comparison to the offshore technologies, because we don't need any ships, divers, underwater mooring or cables. We install on existing man-made structures, and all our expensive equipment, the generator, the hydraulic conversion unit, the automation, is located on land just like a regular power station. This is the EcoWave Power conversion unit that has been operating in Jaffa Port since 2014 until 2020. Here you can see how the technology works. Basically, the floaters are going up and down and pushing the hydro cylinders, which transmit biodegradable fluid into land-located accumulators. A pressure is being built. The higher the waves, the higher the pressure, which is used to turn the hydro motor, which is turning the generators. The whole system is controlled by a smart automation system, which you can see right here. And in case of upcoming storms, the system automatically raises the floater above the water level and keeps them in the upward position until the storm passes.
The company has been operating a 100-kilowatt grid-connected device in Gibraltar since 2016, which is enough to power 100 households. Currently, Ina and her team are working on another 100-kilowatt project at the port of Jaffa in Tel Aviv.
The project will be also the first time in the history of Israel that wave energy will officially connect to the electrical grid. And our goal going forward is to expand it to all suitable breakwaters in the city of Tel Aviv and to supply a significant part of the city's electricity needs.
Today, engineers and entrepreneurs are still trying to crack wave energy. Globally, only a few hundred kilowatts of wave energy are deployed, compared with gigawatts of offshore wind. But the field has come a long way in recent years, and with the right engineering solutions, this new power source could eventually become competitive with more mature renewables like solar and wind.
I would have a lot more confidence in the success of wave energy companies today as opposed to like 20 years ago. But in the next few years, or maybe the next couple of decades, it will be more likely to be used in remote locations like islands that are otherwise dependent on expensive diesel power, or out at sea on gas decommissioning rigs, or for powering underwater autonomous vehicles.
So definitely, wave energy can compete with other renewable energy sources, but I personally believe that this is not a competition. In order to have a 100% renewable energy friendly world, we need all renewable energy sources to work together.
Who are all these people from? Who are all these people from?
So can you please tell me? I'm not going to... please wait.
You know, I've covered a lot of companies. I've covered a lot of Machiavellian companies where, you know, people play rough. I don't think I've ever seen anything on the scale of Nissan.
He's making you, but you're like from this side. I mean, it's corrupt. The system is.
One of the most dramatic elements was Ravinder Passi's home being raided by court officials in Yokohama.
You scared my wife. You scared my children. I worked in this for 16 years.
So Rav Passi's journey into the darkest recesses of the Japanese corporate world started when he was the general counsel, the highest corporate lawyer position in the company.
In the past few minutes, Nissan has revealed that its chairman has been arrested after allegations of serious misconduct.
He was tasked with investigating Carlos Ghosn. And he was told, conduct an internal investigation and get to the heart of the matter. And then along the way, he started to notice serious conflicts of interest.
He is one of the few people who knows an extreme amount of detail regarding the alleged crimes by Carlos Ghosn. And he's now ready to tell his own story on the record about some of the events that happened.
My name is Ravinder Passi. I'm the former Global General Counsel of Nissan Motor Co. Limited. And you could say, yes, I had a front row seat in terms of what was going on.
When Carlos Ghosn saved Nissan years ago, he was depicted in Japanese comic books as this hero, and now maybe we'll see comic books where he's the villain.
In corporate Japan, Nissan was quite an unusual company. It was led for 2 decades by a non-Japanese executive.
Well, Carlos Ghosn was a hero in the Japanese business world. If you had a global business celebrity in Japan and worldwide, it was definitely Carlos Ghosn.
In a country with few foreigners at the top, he stood out. But over the years, he saved Nissan from bankruptcy, allied with Renault and Mitsubishi, and turned the alliance into one of the most competitive in the world.
Yet as the years went on, you know, I think his ambitions changed a little bit. He started thinking about legacy plays, and one of them was to really tighten the alliance between Renault and Japan. And unbeknownst to him, there was a contingent of senior Nissan executives that were really felt threatened by that move. They really thought that they would lose complete control of the car company, and even in the government, there was probably a little bit of anxiety about a national champion in the auto industry falling under full-blown foreign control.
Carlos Ghosn was an auto industry leader, respected by many in Japan. Now he's in jail.
The arrest of Carlos Ghosn came completely out of the blue. This was in November of 2018. He was coming to Japan on Nissan's corporate jet for a regular executive meeting, and he was met on the tarmac by Japanese authorities who whisked him away to a jail and charged him with financial misconduct crimes.
So what happened was that a power struggle ensued inside the company, and somewhere along the way it was criminalized. By that I mean that there were allegations leveled at Carlos Ghosn about the way he reported his pay to Japanese authorities, the way he handled money inside the company, that in other contexts might have been a board action, might have been handled internally. A number of executives at Nissan decided to take this difference and take it over to the Tokyo prosecutor's office, and that unleashed a chain of events that would shake the entire auto industry.
So after Carlos Ghosn was arrested, Nissan launched an internal investigation into the events that led up to his arrest.
So Rav Passi was tasked with investigating Carlos Ghosn, and he was told, get to the heart of the matter, find out what Carlos Ghosn did wrong and bring it to our shareholders.
It's really complicated because you had various things coming out of the weeds. 2018, the investigation has started, and we become aware of matters in terms of conflicts, actions by certain individuals that cause some concern because things might not quite be what they seem.
So in our story, we really took a close look at Harinada and his role in Carlos Ghosn's downfall.
Harinada is one of the most fascinating figures inside Nissan. He's also a lawyer. He's originally Malaysian. Hello, Mr. Hari. And he had a meteoric rise through the company and became very, very close to Carlos Ghosn and other top figures. He had a front row seat at all the major strategic deliberations at the company. And when he discovered that Carlos Ghosn, as his final legacy play, was going to tighten the relationship between Renault and Nissan, he made a decision to go against Carlos Ghosn. And he became one of the key figures that decided that Carlos Ghosn had to go.
Harinada was somebody who actually recruited me into the company, so I have a long-standing relationship with him, or did have a long-standing relationship with him. For many, many years, he was a mentor. I had doubts about the credibility of the process right at the start. Harinada had a plea deal with the Tokyo prosecutors. Now, that suggests he was intrinsically involved in some of the wrongdoing, or the allegations of wrongdoing, and it just didn't smell right, just doesn't sit right.
So there was a basic conflict of interest. In other words, Harinada had to deliver results to Japanese prosecutors to avoid his own criminal liability, and he's accusing and leading the investigation of Carlos Ghosn.
Some of the people who had been involved in the original alleged crimes were also looking into the affairs themselves. Ravinder Pasi began pointing out some of these conflict of interest issues. And the reason for that is essentially his concern was for the company. If the company's own investigation into itself was compromised, that could lead to a very weak position in various lawsuits that it was dealing with across the world.
I had discussions with Harry, discussions with the statutory auditors about these conflicts, discussions with HR about some of these conflicts, because at that point, we reported into him. You know, at the time, everything was quite, as you can imagine, it was, we've got to do this, we've got to do that, we've got to move fast. But when you step back and look at some of these things, you just think, my God, what was going on here? Because me, members of my team, were being placed in immediate danger. Your chairman's been arrested, a representative director's been arrested. They both happen to be foreigners. And then now what we need to do, we're being instructed to do, is certain compliance professionals need to go into properties in Brazil, for example, and retrieve evidence. They've got to do it very carefully, because if they don't do it carefully, they're going to get convicted of criminal activities. And likewise, when a team of lawyers were commissioned to go to Lebanon, I mean, one of my immediate concerns was, why are lawyers from Nissan being sent to go to Lebanon to retrieve evidence? These are just lawyers, they're corporate lawyers from Nissan. You had revelations that a number of executives had benefited from share appreciation rights when they shouldn't have. I mean, you know, substantive amounts of money being taken by these guys when they weren't entitled to take them. And you do think, yes, how is this going to look later on? It's going to look quite concerning. So that triggered, for me, the sort of assessment that, well, I'm going to have to do something, because up until this point, I haven't put down on paper these conflicts and these issues.
So Rav Pasi makes a fateful move. He writes this letter to the board listing every suspicion he has in great detail, backed up by evidence, backed up by memos, of why this internal investigation had serious problems. He sends the letter to the board and it's crickets. He doesn't hear much of anything.
Nothing happened thereafter. Nothing at all. Just like it just gone into a black box.
And he began to suspect that there was a desire, even at the highest level within Nissan, to kind of sweep these conflicts of interest under the rug.
Unfortunately for me, I think, again, with hindsight, people must have thought that this is the nail that's sticking out, and we can't have this. Within 3 days of me submitting that to the board of directors, that letter to the independent board of directors, I was removed from the Ghosn Executive Conduct Matters. I was then told that I could not attend board meetings anymore. And up until that point, I had attended every single board meeting. I was then also told that after 8 years of being in Japan, I'd be going back to the UK. It eventually transpired that I'd be the VP of Projects and Transformation, managing a team of 3. So you can imagine what this feels like at this stage. Almost an arbitrary removal from Japan, where I've lived for 8 years, had 3 children there, my family has grown up, and we've been settled there, having a few months earlier been promoted to vice president at a global level, to being almost demoted.
So Pasi was essentially being reassigned to get him as far away from the internal investigation as possible, and also to a certain extent in retaliation to some of the issues that he brought up regarding the internal investigation and Harinada.
What happened to Rav Pasi can be seen as a series of corporate humiliations. I mean, first of all, his immediate responsibilities were taken away from him. Eventually, he lost, the coveted general counsel title. But it didn't stop there. Toward the end of his stay in Japan, Rav and his wife were convinced that they were being followed.
During that period, I'd noticed that whilst driving my car, I'd have other cars following me. First time I noticed this was around mid-March, and I was driving, I can't remember where I was going, but this grey van, small van, just literally started following me. And I noticed that there was somebody in the car taking pictures. And lo and behold, we were absolutely being followed either by people on foot or other individuals, 2 or 3, normally 2 burly men in a car, different cars at different times, following us around. They were following the family as well. And, given I'd seen the Nissan security department behave in a very, very egregious manner with others in terms of following and surveilling, I was very concerned as to what they were doing and who they were giving this information to. Because if they're giving this information to the authorities, you do think, why? What's going on here? I mean, this is just not normal behavior.
And this all culminated in a rather dramatic event in the middle of 2020.
Who are you people?
Where Nissan had hired a legal team and had obtained an unusual court order from the district court in Yokohama
to basically do a search of his home and seizure of his corporate laptop and phone and other documents.
If you don't let us in now, we have to break this key.
So it's a pretty extreme way to treat someone who had spent 16 years at the company.
These people have all come in. We don't really know who they are, apart from the fact that I've been shown a badge that says the Yokohama court. And they're here to recover a laptop and a mobile phone. It was even more weird because I'd highlighted to the directors that certain Nissan executives were trying to recover this laptop and this phone whilst I was still in Japan. And I was very concerned because it had evidence on there that related to misconduct matters and other forms of inappropriate conduct. It was just another form of intimidation, another form of harassment, forcing me almost to leave the company and the country. Because once they'd retained and obtained these items, we were still followed, which, again, I just couldn't understand. What is the point of doing that? This isn't a car company. This is not the KGB.
I think it's fair to say that Rob Posse didn't have full battlefield awareness of all the intrigue going on at Nissan. I mean, Harinata is interesting because he's both charismatic and charming, and one of the most brutal corporate infighters one could ever run across.
This is a confidential company email, right? You should not have this.
If he had fallen into line, he would probably still have his job at Nissan, be paid very well, and continued his work.
A career that he spent 16 years building at Nissan is irretrievably broken. It's been smashed to smithereens. He and his family paid a huge price, certainly. But in terms of being able to sleep at night, I think, he's come out ahead.
I highlighted issues to the highest levels of the company so that they could be dealt with appropriately by those in charge. There was no response to those, and there was retaliation against me. What's really profound, like absolutely profound, is that none of your colleagues, I mean people who you have known for years, forget it.
Yeah.
You're on your own.
Yeah.
And you got to be ready for that. You've got to be ready for that. If you take it on anyway.
This is the awful truth. There's always someone in the family that's pushing it.
This lady does not deserve to be taken advantage of, especially at your age with your own grandchild.
Yeah.
My grandma is having to sue them. I'm testifying against them. Nobody's talking. They're one floor below right now. I get afraid to go on the elevator. It's sad that it had to devolve to this.
It's like a soap opera to me.
It's a very sad thing.
It's a family feud. A family feud.
Here's a family that, on paper, you would think has the wealth that so many people seek, yet at the end of the day, it seemed to sort of rip everybody apart. My name's Tom Schoenberg. I'm a senior reporter here at Bloomberg News, cover financial enforcement. I was approached by someone close to the Schottenstein family and asked whether or not I would be interested in writing about Beverly Schottenstein and this case that she had against J.P. Morgan. And it was immediately clear that there was a great story here to be told. So I started just, assembling all sorts of documents that the family made available to me. That included a diary that Beverly had begun writing when she started having suspicions about what was actually going on with her money. Beverly obtained her wealth from the Schottenstein kind of retail empire that has at times included Big Lots, Value City, American Eagle Outfitters, DSW Shoes. Beverly's husband died, and at which point they sold off their portion of the company, bringing them an enormous amount of wealth at around 1990. Estimates of her wealth were around $90 million. She, for many years, had that pool of money being managed by outside advisors. Her grandsons in the late 2000s had both graduated and were becoming financial advisors. She gave them a little bit to work with, and over time, her grandson, Evan, became the trustee of her entire estate. Managing sort of family money is not a conflict. In fact, some ways in wealth management, it's kind of how you get your start. It's kind of the seed that you need to sort of get going in the business. But Beverly started having suspicions that something was wrong probably in around 2016.
Well, there were suspicious things, but taken separately without everyone talking about their own experiences, it was hard to really put it together.
She had written a check to her caretaker, Dawn, that bounced. So she went down to her local Chase branch to sort of find out what was going on. She wasn't getting paper statements in the mail, so she asked them to print out a number of her statements having to do with her checking account and her credit card account.
So we went to the bank and asked for the statements. And she got a whole year and going through all of them, page by page by page.
And it was there she saw all sorts of charges that she said she didn't authorize or didn't know about.
I was becoming very, very suspicious. I was starting to look in the money part, and that's what bothered me more when I saw that money was going, and I was not a big spender.
Around the same time, Dawn, she starts noticing Beverly's son, who lived in the condominium below her, came up with Evan with a shredder and started grabbing papers in her office area, including some with J.P. Morgan letterhead, and just started sitting at the kitchen table, just shredding documents over and over.
Yeah, they came in one morning.
They used to do it in the back.
Through the back door, and they brought the shredder inside. And then they went in the drawers in the office and took out all the papers, and they started doing it. I was very suspicious because I know you don't go around and destroying papers.
Beverly said that they had done this many times before.
That's when she said to me, Dawn, I'm going to write my feelings in this black book.
Diary.
And it's a diary, and she started writing. Each day, she would write a little at a time.
Around the holidays of 2018, a package had arrived, a FedEx package, and in it were materials about a venture capital fund based out of the Cayman Islands. Dawn and some other family members take a look at this, and they see that Beverly is signed up for this fund to the tune of $5 million over the course of several years.
And that was really the beginning of it. That was sort of the tip of the iceberg when it became obvious that something was going on, that my grandmother really wasn't aware of this fund.
You know, Beverly started to panic. She got really upset and called, JP Morgan's headquarters in New York and asked for Jamie Dimon. She said she was told someone would call her back, but she says that never happened. She wrote a letter to Evan and Avi, and in there she laid out a number of things that were concerning her: unauthorized trading, the checking account. She had about $1 million worth of jewelry in a safe deposit box, and that her son Bobby had the key to that box, and that jewelry had gone missing. All this was kind of packaged in this, 5-page handwritten amendment to a will and trust.
There's such an evolving narrative about why the jewelry was taken. The only truth we really know is that the jewelry is gone. But why it happened, there have been a lot of different stories.
You just don't take your mother's wonderful things and hand it out.
And they emailed that note to JP Morgan to seize all activity on her account.
And it ended up setting off a firestorm after that. As soon as they got this email that there was a cease and desist and that she wanted to send her money and change brokerage firms, they were actually vacationing one floor below downstairs. They're there right now.
The next day, Beverly's in her place. The granddaughter's still in her place visiting. Dawn is there, and up comes Bobby kind of barging through the door. And he's screaming about what was sent to the JP Morgan. They're now investigating now. And he's furious, takes his mother and sort of puts her into a chair, gets pen and paper, and she says physically forced her to write a retraction letter.
They were pushing me around.
It was a scary time. I was really afraid too.
I had to take her to the doctor, and she did an x-ray because she was in so much pain.
The locks had to be changed. The phone number had to be changed. I really thought we were going to have to hire guards to be outside just for protection.
Oh, it was terrible.
Horrible scene.
Beverly brought her case before the Financial Industry Regulatory Authorities, usually known as FINRA. It took several months of hearings. She sees all sorts of transactions that's going on, hundreds of them that she claims that she never knew about, never authorized, but yet were logged in JP Morgan's files as having been direct requests from her. That included the sale of a large amount of Apple stock worth several $1 million, as well as all her stock in Big Lots. Over the course of their time with JP Morgan, Evan and Avi were making all sorts of trading on her account that was generating millions of dollars in commissions for themselves and the bank, yet she was not sort of getting any of the type of gains that you would expect sort of an $80 million account in a bullish market to be able to get. They issued a ruling entirely in her favor, finding that her grandsons, as well as JP Morgan, they were liable for violating their fiduciary duty, misrepresenting themselves, and they also found that the bank and her grandson, Evan, were liable for elder abuse. Evan and Avi, they were fired from JP Morgan. They issued an award of about $19 million. I reached out for comment, and JP Morgan emphasized that Evan and Avi were no longer with the firm and that their actions do not represent the sort of values of the bank. I reached out to Evan and Avi, heard back from their lawyer saying that, they disagree with the law and the facts that FINRA kind of used to decide the case against them and are seeing if they can have it withdrawn. Her son, Bobby, wrote her a letter, said his sons weren't criminals, and he also admits to taking her jewelry. And he says he needed it to pay off some bad business debts he had.
They never once came up to say, I'm sorry.
If there had been an apology and some acceptance, and asking for forgiveness from my grandmother, I don't think we'd be in the position that we are now.
Since the piece came out, we've received dozens of messages from people, many of whom are telling their own sort of personal tales of, kind of financial advisors gone bad, or family members who got control of an estate and abused, those within. It seems that it's really resonated with a lot of people. I keep, hearing a lot of feedback about Beverly and how, a lot of people feel she did the right thing.
You're never too old to stand up for yourself and try to right an injustice. She was adamant that she wanted to stand up for herself, but at the end of the day, they did wrong.
It's a painful life lesson. Beverly taught them that you don't mess with grandma.
On April 20th, oil markets did something they never had before, and they crashed, went into negative territory and closed the day at minus $40. Meanwhile, in a place called Thaden Boyce in Essex, a group of 9 traders, led by a guy called Cuddles, made $660 million over the course of a couple of hours.
The price of oil has collapsed to a record low.
We've never really seen anything like it. WTI this morning down more than 35%.
People maybe wouldn't have been so surprised if the oil price had fallen to zero, but the oil price went to minus 38. It went far lower than anyone had expected. And so lots of people in the market were saying, well, hang on, something else is going on here.
A couple of months later, I started to get wind through a kind of network of sources that a tiny firm in the outskirts of London had made a huge amount of money that day and potentially had some part to play in what happened.
The information we got was that 9 traders at Vega Capital London had made in the region of $660 million in one day. As a group, I think they made as much money in one day as Apple makes from its international sales in one day. I mean, it's an insane sum of money.
Did they pull off a fantastic trade? Did they predict the way the market was moving and get it absolutely right? Or was there something else going on, and had they actually done something that breached market rules in a bid to sort of push the market? And that investigation is ongoing. So Paul Commins is a trader who cut his teeth in the pits in the 80s and 90s when everyone had a nickname. His was Cuddles. If you can imagine, that was a very sort of cutthroat type of world where people are doing, hundreds of thousands and millions of dollar trades by shouting at each other, giving hand signals, and then sort of scrawling on scraps of paper.
The culture of the trading pits in London was very influenced by the working class guys who became traders there. They weren't like the city bankers that had gone before them. They weren't usually Oxford or Cambridge. They didn't wear Savile Row suits. They were ordinary working guys who happened to have a talent for trading. And a lot of them came from Essex.
I think it was 400 traders in the pits, and Cuddles in his oil and gas pit was described to us as amongst the top 3. In amongst that, was very successful and made very large amounts of money as a young man. But inevitably, mechanization and the arrival of electronic markets was the kind of death knell for the pits. And in 2005, the IPE closed down.
And when the pits shut down, a lot of the traders who worked there lost their jobs or quit or went to work for financial institutions. But Paul Commins decided to start his own trading collective out in Essex.
Some of them are ex-pit guys, cut from the same cloth as him. Lots of them are actually sort of in their 20s, and they're his, drinking buddy's son, or they're his own kids' friends from football. They're young lads, hungry and ambitious, and he brings them into the fold. And fairly shortly, he's got, maybe a dozen or so traders that they're independent, let's be clear, but they're all part of this collective.
Yeah, I'll let Liam deal with Essex.
I am from Essex, so I feel like I'm free to, to get into this.
Sweet, as they say.
If you were to ask someone in Britain how they would imagine a kind of Essex person, they would see someone who's maybe slightly flamboyant, with a sort of Cockney accent, a sort of Guy Ritchie-style accent. Not afraid to splash the cash, but it's probably pretty bright and has done well for themselves.
Don't even make sense, does it?
But, these guys, they drove around very nice Rolls Royces and Bentleys. They went to places like Marbella on holiday.
Baden-Boyce is a very wealthy place. You have to have considerable income to be able to afford to live in that village. It's a really nice place to live, and it's 20 minutes tube ride away from the city.
Earlier in the summer, we have this lead, which is that there's this tiny firm called Vega Capital London, and they were the biggest winners from the biggest oil crash in history. Anyone that covers markets is going to be surprised about that. You're thinking your BPs of the world or your Glencores, but it's this tiny firm.
And one of the big challenges that we had was actually finding out who worked with Vega Capital. It wasn't immediately obvious, and at first we had absolutely no idea. If you go to the Vega Capital website, it says it's under construction. If you do basic online searching, it's very difficult to find anyone who's publicly connected to the company.
So inevitably, we're incredibly curious at this point. Like, who the hell are these people?
The more reporting we did, the more it became clear that this group were connected socially as well as professionally. They went to weddings together, they played golf together, they would go on holiday together. We found out that a number of them were members of the West Ham Supporters Club in London. A few of them started companies together, so you could see all the connections between them and start to see a distinct group emerging.
And it really just was this kind of shock that, this wasn't just like a hedge fund or a firm you'd never heard of. This was actually a group of buddies who all had the same experience on this day and had all made a huge amount of money. So if you're an oil trader, there's a number of different ways you can trade, and probably the most popular is WTI futures contracts.
And it's basically a contract that says, I'm going to buy 1,000 barrels of oil from you at this point in the future, or I'm going to sell 1,000 barrels of oil to you at this point in the future.
It's actually just a financial contract to gamble on to predict whether oil is going to go up or down.
On the 20th of April in Essex, there had been signals for a while that this was going to be an exceptional day in oil markets. And we know that some of them arose early and started their trading in the early hours of the morning while it was still dark outside.
Essentially what they were doing is buying contracts that gave them an obligation to buy oil at whatever the price ended up at 2:30 p.m. So they're basically placing a bet that oil was going to fall throughout the day.
But they're simultaneously selling lots of oil as well. And whether they make a profit and how much profit they make is the difference between what they buy the oil for and what they sell the oil for. Now, of course, we now know throughout April 20th, the price dropped and dropped.
So this is going very well for them. They are committed to selling oil at these prices, and the prices are continuing to fall, which means they're going to be able to offset it and buy oil at cheaper at the end of the day. Now, once it gets to kind of 1:30, 2 p.m., that's when things start to get really interesting. Suddenly there's a kind of influx of buyers and sellers, as desperation increases in the market and trading volumes go up. Now at 2:08 p.m. exactly, something bizarre and unprecedented happened, which is that oil passes into negative territory.
And it fell to a record level of minus $38.
We've never seen anything like it, period, in terms of the contraction of the global economy.
That huge gulf between what they were buying the oil for and what they were selling it for enabled them to make more money than they ever thought possible.
So their profit was the difference between minus 37 and all of these positive numbers on every contract they sold.
The price of crude briefly hit minus $37 a barrel. For one group of traders operating from a small office, it was a very, very profitable day.
It's important to remember this had never happened before in the history of oil trading. No one could have predicted it.
I can't think of another example of where you enter a trade and you get paid on both sides. You get paid both to sell and to buy. It's unthinkable.
One thing we know about the Cuddles Trading Arcade is that they were very comfortable taking large risks. And, you have to be clear, this was a large risk.
Yeah, we spoke to oil traders, both people that know these guys and people that don't, and they all say that this is, incredibly risky.
And that's actually what stops a lot of oil traders doing trading like this. They simply aren't willing to stomach the risk. But Cuddles and his friends were.
So when the kind of final calculations came down, the group of the 9 most profitable traders made $660 million or thereabouts between them. I mean, if you can imagine, I think 3 or 4 of them made in excess of 100 million each.
One of the astonishing things about this trade is that 2 of the individuals who made more than $100 million in a single day were in their 20s. One of them was 22 years old. Only a few years earlier, he'd been posting on his social media about doing teenage stuff with his mates in town and going to see girls and rap music. And here he is a few years later making $100 million in a single day's trading. When me and Liam discovered that, we couldn't believe it. We couldn't believe what we were seeing. Oil trading is a zero-sum game. Anytime you're making money as an oil trader, someone else is losing it.
Amongst the biggest losers were the investors in this Chinese fund, Crude Oil Treasure Fund. There were thousands of them, and they lost everything.
Lots of people had put their savings into oil funds. They lost money that day. Big banks and brokers who sort of stand in the middle of trading parties, they lost money that day.
And another interesting thing is that oil-producing countries like Kuwait or Canada, they sell oil as an average of the WTI closing price over the preceding month. So the fact that one of those numbers in that average was minus 37 meant, if you can imagine, countries like Saudi Arabia and Kuwait potentially lost a couple of dollars on every single barrel of oil they sold that month.
Vega Capital's traders made such an extraordinary sum of money that it was inevitable there would be some scrutiny of what they did. But it wasn't just the sums of money they made. In the vital half an hour before the settlement price was set, they were by far the biggest sellers of oil futures in the market, which is an incredible thing to think about when you consider that the other participants in that oil market are going to be the world's biggest banks, oil majors, BP and Shell, and here you have a group of 9 guys in Essex who are having this significant influence over a global market for oil.
I mean, I think you have to assume that if these guys had made $7 million or $10 million, they probably would be celebrating in Essex right now. But the fact that they made closer to $700 million has meant that they are facing understandable scrutiny.
We wrote individually to all the Vega traders who did exceptionally well that day, and we got a letter in response from a law firm representing the group. And the law firm was at pains to point out, number one, that they haven't been accused of any wrongdoing, that they all traded independently and separately, and they'd basically all made up their own minds that this was what was going to happen in oil markets based on publicly available knowledge, and decided to execute this trade.
What I love about these stories is there's a real variance of opinion, and some people will look at what happened and think that must be dodgy. They all traded at the end of the day. They all made a huge amount of money while all these people lost. That's shocking. But lots of people say these guys are at acute disadvantage. They're in a market that's inhabited by, huge technology-driven funds and firms and oil giants that have got all the advantages in the world, and when you get a bunch of Essex geezers who essentially beat the market and find a way to make a huge amount of money, they should get a pat on the back, really, because that's the dream. Since this happened, a lot of the guys have stopped trading the monthly settlements that they'd done so well at in the past. Several of them have set up new companies. They've essentially gone very quiet. Any kind of social media presence they had has kind of closed down. By all accounts, they're, waiting this out.
It's certainly too early to try and predict how the regulatory investigations are going to pan out. We just don't know. There's a number of potential outcomes for these guys. Potential punishments if there are any findings of manipulation against Vega or anyone affiliated with it might be you could be fined, you could be banned from trading, and in the most extreme cases there have even been criminal prosecutions in the past of people who have been found to have been manipulating the settlement and misconduct related to trade at settlement. There are other outcomes too. One obvious one is going to be that they're able to walk away from this life-changing trade with all the money that they made and celebrated as heroes in the trading community. That they'll go down as legends.
It's very important, given the nature of the climate crisis right now, for the general public to have an understanding of what progress is or is not actually happening. And I think many readers right now, they'll see these hundreds and hundreds of companies making these big, bold climate claims. And they would be forgiven to think that we're well on our way to meeting the emission reduction trajectory we need to be on. And the reality of the matter is we're just not on that trajectory. And a key reason for this sort of disconnect is the use of offsets that aren't doing what they claim to be doing.
We have a massive potential for sort of willful blindness. We can convince ourselves of things regardless of what the facts are. And so that's what tends to happen in these cases. It's not that anybody is setting out to commit climate fraud. They sort of walk themselves into a situation and they convince themselves of one thing, and that allows them to convince themselves of another thing. But at the end of the day, they're doing something that makes no sense at all.
My name is Ben Elgin. I wrote the story about how the billion-dollar market for carbon offsets is setting back the fight against climate change. So one of the challenges in reporting on carbon offsets and trying to figure out what's going on is really finding good experts who have been steeped in this marketplace and are willing to candidly talk about it. One of the best people for this is a fellow named Mark Trexler, and I've been talking to him for more than a decade.
My name is Mark Trexler. I've worked in climate change for the last 30 years. I was actually hired by the World Resources Institute in Washington to work on the first carbon offset project in 1988. In terms of defining a carbon offset, one of the beauties, so to speak, of greenhouse gases, sort of the silver lining of greenhouse gases, when you put up a molecule of CO2 into the atmosphere, it can be anywhere in the planet in 7 days. And therefore, if there's an option to reduce emissions on the other side of the planet, and you can do that very cheaply as compared to doing it in your factory, for example, then why not pay that person, that factory on the other side of the planet to reduce their emissions? Then you are, in a sense, offsetting your emissions, and the atmosphere doesn't really see your emissions anymore.
So carbon offsets have been around for quite some time, and they were actually key with these international climate agreements, such as the Kyoto Protocol, which mandated the wealthiest countries reduce their greenhouse gas emissions.
The treaty was signed on the 11th of December, 1997.
Decided. The business community in general saw carbon offsets as a huge opportunity to comply with whatever policies and measures might be coming down the pike on climate change much more cost effectively.
We've seen a huge surge in companies making big proclamations about how they're going carbon neutral or zeroing out all of their carbon emissions.
We're going to reduce our carbon footprint to net zero.
Unilever is committing to net zero emissions.
We can achieve a net zero emissions world.
We began looking at these corporate claims of dramatically reduced emissions, and we noticed so many of these companies were using carbon offsets to achieve these aims. And as we began to look at the carbon offset projects themselves, what we found is that the environmental benefits claimed by these companies are not actually what they seem to be. And as we sort of saw and spotted a number of these very aggressive carbon offset projects, which appeared to be generating inflated credits or bogus credits, we saw a number of them were associated with the Nature Conservancy. This surprised us. The Nature Conservancy is the world's biggest environmental group. They have about $1 billion a year in revenues, and they've been around for 7 decades. They've preserved about 125 million acres of land, and they've done so many good works over the years, and they've been very strong in terms of working with corporate partners. The Nature Conservancy has taken a different approach, a very pragmatic and pro-business approach. They will not go out and criticize a big polluter, but they're very happy to work with them. Some might say that, well, that's selling out, but others would say, and those at the Nature Conservancy would say, these companies have deep pockets. They can help fund important preservation work, and we have absolutely no problem working with them on this stuff. So companies are very warm, and they've partnered with the Nature Conservancy for many years. And yeah, it definitely lends a sheen of credibility to these projects.
Here's 20 new reasons to visit Disney World this year. 1, 2, 3.
If you look at, for instance, Disney, that's a sprawling company with theme parks and cruise lines that burn up diesel fuel. They have office buildings and television studios that consume electricity. So these companies are trying to make major reductions in their carbon footprints, but it's very difficult to change these fundamental ways their businesses operate. So Disney has been a big buyer of carbon offsets that are orchestrated by the Nature Conservancy. One of the projects that they buy from is called Pennsylvania Ridges. And that's a plot of land. Most of the land is actually about a 3-hour drive outside of Philadelphia. Interestingly, this land, 3,000 of these acres, was actually acquired by the Nature Conservancy in the late 1990s. This land was imminently threatened. There was a pending logging contract on this land. So they do what they've done so well for all of these years, which is they go out, they raise money from local philanthropists, and they go buy this land to protect it from developers and loggers. And at the time, according to an archived version of the Nature Conservancy's website, when they were proudly announcing this deal, they said, these threats have been abated because of this acquisition by the Nature Conservancy. So it's really interesting now, fast forward 2 decades to earlier this year when they put forward this carbon project. And if you look through it, this land is a key part of that carbon project. And what they're now saying is this land is now once again imminently threatened. 72% of the trees are going to be cut within 5 years. Now, this is just astounding because this land is owned by the Nature Conservancy. They do not clear-cut land that they've bought through philanthropic donations. So this scenario that they've put forward to get carbon revenues is not really plausible. And what that means is when you have Disney coming in and buying these credits, when it eventually lowers its carbon footprint because of these credits, well, that won't be a credible or truthful claim by Disney. So this is an organization that truly understands the threat of the issue of climate change and is wanting to do its part to address this. However, in this situation, it just appears their drive, which they've had for decades, to increase the amount of revenues that it can use for land preservation work, Nature Conservancy and many others see that the carbon credits as a pot of money that they can tap into to further their own benevolent aims. But unfortunately, what this has resulted in is claims of climate progress that just aren't really happening. So the Nature Conservancy defends vigorously these deals, and they and others will say, look, our projects are just following the rules that these registries set up. So some would also put some of the blame on the registries themselves because they're setting up the rules which allow these vapid projects to get up and sold. So we've reached out to all of the companies we mentioned in the story, including Disney. They didn't want to be interviewed for this story, but they all told us that, look, we have to rely on the experts out there, and those experts, they say, are these carbon registries that have been set up. Most of these Nature Conservancy deals are set up and sold on this exchange. It's called the American Carbon Registry. Now, it's the oldest of these registries that allow voluntary carbon credits to be sold. They've been around since 1996. What these offset registries do is they set up rules, and any carbon offset project has to follow those rules. But there's this tension that's always there. If the rules are too strict, then it's going to be very hard for carbon offset projects to get up and running. So there's this balance going on where the registries want rules that attract projects, but they don't want it to be so strict where it will disincentivize projects from getting listed.
One of the challenges with designing carbon offset systems is that there are normally two people at the table. You have buyers and you have sellers. And to some extent, you have policymakers, but you know, the buyers and the sellers are really the ones with the expertise, with the incentive to really participate hard, make a lot of things happen. And the challenge there is that both of them sort of want the same thing, or they're both happy with the same thing. They're happy with low-cost offsets and a lot of them, because that works for their business model. You end up, though, with nobody really representing the atmosphere, so to speak. Nobody's really representing the climate in those discussions. And so the policies end up biasing the whole system, and you end up in sort of a race to the bottom, and that's what we've seen happen. You know, when it comes specifically to the topic of carbon offsets, you know, I am a fan of carbon offsets in the sense that they can help mitigate climate change. They absolutely can. But, you know, if we're not going to do it correctly in a way that actually does help mitigate climate change, then it's nothing but a distraction. And, you know, after 30 years, you have to start wondering, is it really just a distraction? And that's really unfortunate, but that's where we are. Ultimately, what needs to happen is systemic change. You know, we're sort of nibbling around the edges with some of these different things. We need to change how we produce energy. We need to change how we transport ourselves. We need to change what and how we eat. You know, we need systemic change associated with transitioning to a low carbon economy. A lot of what we're doing today is not promoting systemic change. It's sort of trying to stick your thumb in the dike to preserve the current system. And at the end of the day, that can't really work.
the Hyperloop. There's a good chance you've heard the name by now.
This is the Hyperloop system. It can take people hundreds of miles in minutes.
The Hyperloop, a series of tubes that would transport people in pods at ultra-high speeds over long distances.
It's a remarkable new form of transportation that can whisk people from city to city in a flash.
29 minutes from New York to D.C., 30 minutes from L.A. to San Francisco.
For years, we've been seeing these futuristic, utopian renderings of some cross between a spaceship and a monorail. But lately, the Hyperloop is becoming much more real.
Yes. It was surreal to be even sitting inside a Hyperloop, and just even more incredible to actually be like riding down a track in something that was nothing more than a crazy idea 6 years before.
Companies all around the world have been developing and testing the technology needed to propel passengers at speeds of over 1,000 kilometers per hour. But for many, speed is only the first step to unlocking the full transformational effects of a new mode of transportation.
Fast is what we just sort of take for granted in the Hyperloop world. It's the network effects that really deliver the benefit. And that opens up a completely different scale of economic opportunity.
We've got planes, trains, automobiles, and boats for getting around Earth. But what if there was a fifth mode? And I have a name for it, which is called the Hyperloop.
The Hyperloop?
Hyperloop, yeah.
In 2013, while riding high on the growing success of Tesla and SpaceX, entrepreneur Elon Musk released a white paper outlining the basic framework of the technology he called Hyperloop. The basic idea goes a little something like this. A tube reduces the air pressure to a near vacuum-like environment. A Hyperloop pod is then suspended in the tube, usually by magnetic levitation. The whole pod can then be propelled forward. Because there's no traditional friction sources like air resistance or rolling friction that would push back against the pod, the Hyperloop is able to move at incredibly high speeds and do so fairly efficiently. Despite its futuristic name, however, the general concept behind Hyperloop is actually pretty old. In fact, New York City's first attempt at an underground public transit system in the 1870s was based on a similar principle. The pneumatic transit system was short-lived, however, only stretching one block and topping out at a rather leisurely 10 miles per hour. While Elon would make some 21st century improvements to this concept and bestow a very 21st century name, he wouldn't end up pursuing the technology itself, instead electing to focus his efforts on something a little bit deeper, literally digging the requisite tunnels via his boring company. It would take another billionaire industrialist who dabbles in spaceflight. No, wait, not that one. Yeah, that's the one. After Richard Branson would make a large investment in the company Hyperloop One, it would be renamed to Virgin Hyperloop.
What we've always been trying to do as a company is show that this technology could work, that it could be made safe, and that ultimately it's something that's happening in the next couple of years, not the next 20 years.
Josh Geigel is the co-founder and CEO of Virgin Hyperloop. In a familiar tech startup story, he's seen the project go from a garage to a large-scale testing facility outside of Las Vegas.
So we started building the first kind of Hyperloop system in 2016. We've done a lot of work, about 500 tests that we've done on that over the last 5 years. And what we realized that we need to do is take that technology, show that it can be commercial, so drive the cost down, improve the efficiency, improve the performance. But the key thing is actually making it approachable and safe for individuals.
In order to do that, Josh, along with Virgin's head of passenger experience, Sarah Lucian, bravely volunteered to take the inaugural ride.
What her and I were realizing is we're the first two people sitting in a Hyperloop. The only type of people that have gone through this environment are in spacesuits, and there we are in just normal clothes because of the system, the safety of what we've designed.
3, 2, 1, launch.
And then once we started going, you felt a bit of acceleration. We accelerated a little bit harder than we would in commercial. It'd be like a sports car. Yes. We got up to about 108 miles an hour on that test. And it's a short run. It's about 500 yards or so. And came to a stop.
The test, lasting only about 20 seconds and covering only a quarter of a mile at just over 100 miles per hour, is a long way away from a true functioning Hyperloop. But as for optics, it's a crucial step for the future of funding.
The number one question we got from investors or from project proponents or just people in general was like, is a Hyperloop safe? And what better way to show something is safe than by actually getting people on it?
But convincing investors and governments that would likely be fronting some of the construction costs for an unproven technology is no easy task. First and foremost is the question of safety.
Most people don't know how an airplane works, but yet they get on an airplane. They get on an airplane because, it's faster than driving, and most importantly, they've probably gotten off of one before, they've seen someone get off of one before. And so what we set out to do was actually show that Hyperloop could be safe with two normal people, not astronauts, not adrenaline junkies or test pilots or anything like that. Two normal people getting on a Hyperloop, and then most importantly, those two people getting off.
But beyond safety concerns, constructing Hyperloops will undoubtedly require a significant capital investment to the estimated tune of around $60 million per kilometer of track. So a track from San Francisco to Los Angeles, for example, is likely to come with a price tag over $10 billion. And before large governments are willing to come in and front those costs, investors who are funding Hyperloop development must accept it as a long-term mixture of technology and infrastructure investing.
Investors that are used to short returns because you're developing apps or something to that effect, those aren't the investors that really get excited about Hyperloop. What you start to see is the people that are looking at platform technologies, right? So this idea that because the smartphone existed, Uber could exist, right? So who are like the Vanderbilts of this century? And that's the part where you're going to get a lot more no's than yeses. But those people that have the ability, the fortitude to stick it out, to see the game-changing platform here, those are the people that we're looking for. And since we've done that passenger test, there has been a lot of interest that's really, this is a lot sooner than I thought.
Envisioning the ripple effects of what Hyperloop could achieve, though, is fairly challenging at this stage of development. It's fast, yes, but for point-to-point travel, traditional maglev trains can move pretty fast as well. And outside of China, South Korea, and Japan, even those haven't seen much adoption elsewhere due to the high costs and questionable profitability. The Shanghai line in China, for example, loses around $100 million every year. Hyperloop companies, however, believe they can offer something different than traditional railway lines.
My name's Alan James, and as far as I know, I'm the only guy on the planet who's written a government-level business case for 300 kmh conventional high-speed rail, 500 kmh maglev, and 1,000 kmh Hyperloop. It's fundamentally about moving people from where they are to where they want to go, when they want to make those journeys, and doing it in much smaller numbers. So pod designs for Hyperloop range from 12 to 28 seats, typically. Why are they small? It's because small enables the network to operate flexibly. And a great example of that is the east-west strategic route across the north of England, from Liverpool to Manchester to Leeds. So to get from Liverpool via Manchester to Leeds by train is just short of 2 hours today. It'll probably take you 2 hours driving as well in average traffic conditions. Net result is those three city regions remain three separate entities: Liverpool, Manchester, Leeds. There's very little commuting traffic between those urban areas. Hyperloop absolutely changes that from the ground up. Liverpool to Manchester is a 5 or 6 minute journey. Manchester to Leeds is also a 5 or 6 minute journey. What that effectively does is create a single supercity economy.
In this vision, the Hyperloop acts a little more like a highway, where pods have fixed destinations and don't need to stop along the way. Meaning you can travel on a Hyperloop network from, say, Liverpool to Leeds, while the pod behind you travels from Liverpool to Manchester. And if that metro Hyperloop network is connected to other networks from the same location, you could travel from Liverpool to Paris or Liverpool to Amsterdam, all without making a single stop.
For passengers, for business, for leisure, that is utterly transformational. For high-value freight and logistics, it's equally transformational. But critically, if you do a Hyperloop network at scale, you begin to deliver massively significant carbon savings too.
A multi-regional Hyperloop network could become a replacement for both short-haul passenger and cargo flights and traditional ground transportation, both of which are significant carbon producers.
One Hyperloop-connected distribution hub, perhaps at an airport that is predominantly used for international air freight, replacing maybe 10, 12, 15 distributed road hubs. It takes a lot of polluting and inefficient truck haulage off the roads. That itself means roads gain extra capacity.
Hyperloops will still need to use electricity to both move pods and maintain the near vacuum environment in the tube. Proponents of the technology believe that this can be done by using renewable sources, including a combination of solar panels and battery technology that could be used along the Hyperloop itself. But even with all multipliers of time and carbon emission savings that a Hyperloop network may provide, the investment capital required to actually build such a network becomes even more economically and politically daunting.
Committing doesn't mean spending billions on day one. Committing means, how do we phase it?
One company in the Netherlands is working to develop that technology, and perhaps more importantly, the international coalition needed to make the Hyperloop network a reality.
So we are here in Europe's first full-scale Hyperloop test facility, where we can already prove every conceptual technology of the Hyperloop.
This is Tim Houter, a co-founder and CEO of Hart Hyperloop, headquartered in the city of Delft. And while this testing tube might not seem as large as others, inside is a key technology to create the on- and off-ramp type infrastructure of a Hyperloop network. That is, a lane switch.
That's something we can already test here. You can actually see it here, that the track is diverging from one track into two. That makes it possible to eventually split up the Hyperloop track in two sections. And in that sense, you can create a complete Hyperloop network. That in the end will make it possible to travel, for example, over a whole continent. Take Europe, for example, with the same ease as you can now travel with a metro in a city.
The nice thing about this magnetic levitation system that we've developed is that there's absolutely zero moving components in the track. So for example, if you have to do a lane switch, all you do is that the tube basically splits up, and statically the tracks also split up. And whenever the vehicle enters a switch, it either pulls itself to the right with its magnets, or it pulls itself to the left with its magnets.
Lane switching on traditional rail requires the physical movement of the rail. Even modern magnetic levitation tracks use lane switching techniques in order to transfer trains from one track to another.
And this is a very crucial element, because this is the thing that limits the capacity and, in the end, the usefulness of the rail network. Because the moment that a track is switching, that means that at that moment you are creating an unsafe environment for the trains behind it. So you need a lot of space between trains. But in a Hyperloop, because you have no moving components in the track, all the vehicles can be much closer to each other. You can achieve a very high frequency and basically have your vehicles moving and merging in and out of the network very much like a highway.
For now, though, Hart's physical testing has been limited by the size of their tube. Because the test track is only 30 meters long, they haven't tested this lane switch at speeds greater than 20 kilometers per hour. However, the company is working to build a new test site where it plans to increase that testing speed to 300 kilometers per hour.
We're now in a phase where we have proven most of the most important technologies in the test facilities that we already have. And we have also demonstrated the viability and the feasibility of a network. If you look at all the subsystems that it consists of, most of those are proven systems, already demonstrated in lab conditions. So we don't really believe that the technology itself is going to be the biggest challenge.
Because for all Hyperloop companies out there, actually building a Hyperloop system requires more than just a good product.
We're talking about the safety aspects, we're talking about integration into the environment, we're talking about the social aspects. Do people feel comfortable traveling in such a system? So it's about all these different aspects, and the complexity is really getting all the different stakeholders that are relevant and that do need to contribute to bring this to market, to get them all following the same roadmap.
In order to help build this coalition of private and public interest in Hyperloop development, HART in 2018 partnered with other Hyperloop companies from Europe and Canada. The goal was to define, establish, and standardize the framework to regulate Hyperloop systems.
Right now we are working with all the Hyperloop developers together in setting up the first, let's say, structure for starting the standards drafting.
One of the most important goals for HART is interoperability, which is essentially making sure the different systems can communicate with each other.
Interoperability is so important because what we want to achieve is actually have this seamless travel experience. So you don't want to end up, for example, going from Madrid to Paris and then switching because you need to use a different technology to get, for example, to Amsterdam.
The idea being that as companies around Europe create the first commercial Hyperloop tracks between individual cities, one day those can all be connected to a larger network.
Everyone that believes that Hyperloop is a future transport system also realizes that there is a need to have this network because that's where Hyperloop thrives.
Hyperloop is such a huge project. It's definitely not something that you can do on your own or as a single company. So you need to do it with a lot of other companies. You need to have the governments. And I think in that sense, the biggest challenge that we've encountered is to really get all the required parties together to take the steps in development and in commercial implementation.
HART's next plan is to build the European Hyperloop Center, an open testing facility which will include a 2.6-kilometer test track. And the company hopes to test travel speeds there at up to 700 kilometers per hour. Virgin Hyperloop is also racing to construct the first commercial Hyperloop route, with projects in various states of development in India, Saudi Arabia, and the United States. Recently, the company announced plans to build a Hyperloop certification center in West Virginia, which will include a 6-mile-long test track. Proving the technology here will be crucial if Hyperloop networks can find a home among infrastructure investments that the Biden administration hopes to make.
The idea that there's multiple Hyperloop companies, I think, is a redeeming aspect in the business. People really want to see something happen, so having multiple people move forward is good for that.
I was struck when Josh and Sarah rode the pod. 2 or 3 of the major outlets used the phrase, "We now have a new mode of transport." And although all of that technology had existed before those 2 human beings rode it, it was the moment at which those 2 human beings traveled that short distance down the tube that in popular imagination, Hyperloop became a mode of transport.
The metaphor I use with my team is that, the Wright brothers were first, but none of us fly on Wright Brothers Airlines anymore. If you don't continue to innovate, you're not going to be around, and so we'll continue to be at the forefront of building Hyperloop.
Back in 2013, Elon had an idea. I think the difference now in 2021 is is some brilliant engineers have spent real time grinding out the details. And I thoroughly expect the next 3 to 5 years to be decisive.
This week, how hydrogen can transform our energy usage. We'll look at why the universe's most abundant element could be a game changer in the climate revolution.
Hydrogen technologies are not new. They are used in other sectors. We use them in space, on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes.
From iron ore to green hydrogen, one of Australia's richest men tells us about his pivot to sustainable energy.
Let's take action. It's practical, it's implementable. Let's do it now.
Plus, the hydrogen revolution. We'll speak with the CEO of Italian utilities firm Snam about his new book and how green hydrogen could be competitive within 5 years.
Costs are coming down and people are waking up to the fact that it's the only way to decarbonize certain sectors.
From Bloomberg's global headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. It's a new year, so here at Bloomberg Green, we're highlighting new solutions in the fight against climate change. And one of those is as old as the universe itself, hydrogen. It's the simplest element around, but could well be a game changer when it comes to turning around our dependence on fossil fuels. Today, hydrogen is used in the chemicals industry to produce petroleum products. It's also starting to be used in steel production, an industry under a lot of pressure to decarbonize. But it has far more uses as well, from powering cars to heating our homes. And Bloomberg New Energy Finance sees a seismic shift in the sector in the next 10 years as green hydrogen squeezes out dirtier alternatives. So-called gray hydrogen dominates today. But as renewable electricity gets cheaper and more accessible, so will green hydrogen. In this week's edition of Bloomberg Green, we'll explore what this push into hydrogen means for tackling climate change. We'll hear from Australian billionaire Twiggy Forrest about his pivot from iron ore to hydrogen, and we'll also speak with the CEO of Italian utility company Snam about his book, The Hydrogen Revolution. But first, what are we using hydrogen for? And why does it actually matter? Christine Lee Edwards explains.
Hydrogen, the most plentiful element in the universe.
On Earth, we find it mostly bonded to oxygen in the form of water, or in other gases known as hydrocarbons. Hydrogen gas, H2, burns hot and clean, making it an attractive tool in the race to net zero. But isolating hydrogen from other elements is no easy task. Today, the cheapest way to do this is via chemical processes that break up natural gas. This releases a lot of carbon dioxide. Another method is to use electricity to split water molecules in a process called electrolysis. Although there is no carbon byproduct, a lot of electricity is needed. And if this power comes from burning coal or gas, it negates the zero emissions goals of using hydrogen to begin with. Hydrogen produced in this way, powered by fossil fuels, is called gray hydrogen. If carbon capture and storage is used together with fossil fuels, then it becomes blue hydrogen. If nuclear power is used, it's called pink. And finally, green hydrogen is when it's produced via electrolysis and powered from renewable sources. This method is considered emissions-free. It's predicted that by the early 2030s, H2 made from renewables will be cheaper than that made from fossil fuels. But that hinges on the cost of electrolysis declining, which will be achieved through larger projects and an expansion of manufacturing. To be clear, vast amounts of H2 are already used today. Global production in 2018 totaled 117 million metric tons. This hydrogen is mostly used for its chemical properties, not as a source of energy, and very little of it is clean. Some sectors like steel could start using hydrogen for these chemical properties, replacing coal. Industries like cement and glass may also use hydrogen as a source of heat. Another advantage is its energy storage potential. It can be stored over long periods of time and used when more power needs to be added to the grid. It also could hold an advantage over batteries in heavy transport and shipping. The promise of hydrogen for energy has been around since at least 1874, when Jules Verne wrote about it in his book, The Mysterious Island. But the future of hydrogen will depend on policy. Countries with net zero targets, carbon pricing, and hydrogen strategies with investment mechanisms are likely to see the highest H2 demand.
That was Bloomberg's Christine Lee Edwards explaining what hydrogen means for the energy transition. But how are businesses approaching the sector? Well, one of Australia's richest men is making a big play into hydrogen. Andrew Forrest, better known as Twiggy, made his fortune from iron ore, being the chairman, former CEO, and major shareholder in Fortescue Metals, one of the world's biggest miners. But after having made over $10 billion in profit from the metal in the last fiscal year, Twiggy wants to transform Fortescue into a clean energy company. He's been scouring the planet in search of investment opportunities in hydrogen and renewables. The firm plans to allocate up to 10% of its annual profits for green energy investments and is exploring projects across the globe, from Indonesia to Argentina. Francine Lacqua caught up with Twiggy Forrest.
There's only one type of clean hydrogen, all the rest is dirty.
Yeah.
That is green. If you just say green hydrogen is clean, the rest is dirty, then you've actually nailed it. And, you know, anyone else who produces any other rubbish, any other argument, just look them in the eye and say, why is global warming accelerating if anything you're saying is true? And then you'll know, actually, it's greenwashing.
Yeah, but there's a lot of greenwashing because I keep on being told it's a transition. We can't just, make the transition at a click of a finger. So what are we doing wrong? What can we do better?
I don't remember the personal computer having to transition the typewriter. I really don't remember that. I don't remember the smartphone having to transition the pocket calculator and the old landline. You know, its transition line is complete rubbish. The lie got put to it 2 days ago when JCB, a really loved British company, every right for the country to be proud of JCB, and Fortescue, holding a bit of a similar reputation, fantastic track record, everyone's been super well from Fortescue, huge balance sheet, super strong. When those two companies got together and agreed a $79 billion agreement per annum, right, then that's a real wake-up call to say, hang on, green hydrogen is obviously commercial now. You know, every other form of fossil fuel hydrogen, you know, it can compete with it on price, it can probably lose on price, but what we know, it is cooking the planet. And only green hydrogen zero methane, zero carbon in the supply chain. Don't worry about the molecules in the supply chain.
But at the moment, we're not even phasing out coal, if you look at the G20 communique. So we have a long way to go to talk about only using green hydrogen.
Yeah, so look, I have a call, which I'd like to make now, that the world should not fund any more coal-fired power stations, coal mining projects, ever. We should wind them down as quickly as possible because they are cooking the planet just like grey and blue hydrogen is cooking the planet.
Yeah.
You know, hydrogen, which is not made from renewable electricity, is releasing 10 to 16 times more carbon, let alone the methane, which is worse, than it is hydrogen. So we've just got to stop doing things which are self-harming under the guise of greenwashing.
So why are leaders so slow? Even if you look at the appetite for ESG investments, they're growing exponentially, so are emissions. So where are we allocating capital?
Okay, so take the recent G20. There's probably a reason why there wasn't strong action coming out of the G20 because people were not aware that major transactions between large companies were taking place now on green hydrogen, that actually this pollution-free all the way to the supply chain fuel is now being transacted at multi-billion-dollar scale. If they'd known that, I don't believe any sovereign leader or any energy minister or climate change minister could not take ultra seriously that green hydrogen is now here to stay. It's broken through. History has been made. It will never go back.
Okay, what is the one thing that you would tell leaders today and business leaders? How do we transition faster than what we are now because we're at real risk of missing our targets?
Oh, so that's really simple. You stop funding, you stop subsidizing, you stop using money into fossil fuels. It could be carbon sequestration, it could be fuel rebates, it could be anything. Hundreds of billions of dollars getting ashed while we ash the planet on fossil fuel subsidies. Because we haven't had that renewable electricity, we haven't had that green hydrogen, it's kind of been pushed down. It's all sorts of excuses. Oh, it'll never be commercial. It'll never be supplied in the quantities we need it. You know, blah, blah, blah. Now we know, let's take action. It's practical. It's implementable. Let's do it now.
Okay, if we do it now, is there going to be a shock to the energy system? Is there going to be a shock actually to economically? And is it worth, not talking about transition, just going from A to B?
Yeah, it's a fantastic question. A to B is the solution. Let fossil fuels do what fossil fuels do. Just burn their coal, burn their oil, burn their gas. At least they're pumping up carbon and methane into the atmosphere honestly. Well, not that honest because they don't measure methane, which is 90 times worse than carbon. But at least the carbon is being done honestly. Encourage the green hydrogen sector to come in really fast. Okay, it's there. There's renewable power all over the world. We now know how to make electrolyzers much cheaper, like 25% of the original cost. We know how to do that now. We don't have an excuse to get into it.
Does it need to be cheaper than oil and fossil fuel for it to be viable worldwide?
Well, right now it is. Okay, so let's just swallow that bit of financial data. Right now it is cheaper, and it's getting more cheap. It's the only fuel you know of which is declining in value.
You don't have enough of it, right, to power the world.
Yes. That's only because we haven't had policies to support it. If we had policies to support it 5-10 years ago, it would be everywhere. You'd see the global warming budget start to come down. Now, we've got 5 or 10 years to make a huge difference. I need policy leaders all over the world to appreciate now, okay, big business is transacting with green hydrogen in multi-billion-dollar agreements. We now know it's here and it's here to stay. Let's spread it everywhere.
Coming up on the program, the hydrogen revolution. We'll speak with the CEO of Italian utility firm Snam about his new book and why he thinks green hydrogen will be competitive in just 5 years. Plus, how are airlines working to become more sustainable? We'll look at how Airbus plans to step up in the climate fight. This is Bloomberg Green. Bloomberg's world headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green. What will the world look like in 2050? Will global temperatures have stabilized, electric vehicles be abundant, and solar and wind power homes around the world? According to Marco Alvera, the CEO of Italian energy company Snam, that vision of the future could be a reality. And he says that hydrogen will pave its way. As he tells it in his new book, The Hydrogen Revolution, Alvera's moment of reckoning came in November 2018 when he tasked the Snam Scenarios team with studying how Europe could reduce its CO2 emissions to zero by 2050. Looking through the results of the study, Alvera said he was struck by how much hydrogen was in Europe's energy mix by that year. Beyond the abundance of hydrogen, the Snam model also predicted that it would be the cheapest form of decarbonized energy for many sectors, and that it could be cheaper than today's prices for oil, coal, and nuclear power. Our Maria Tadeo spoke with Alvera at COP26.
It's happening all very fast. We see the cost of hydrogen coming down a lot. Hydrogen will play a big role in the energy mix. I don't know if it's going to be 15 or 25% of a fully decarbonized energy system, but it's going to be big. Costs are coming down, and people are waking up to the fact that it's the only way to decarbonize certain sectors, the so-called hard-to-abate sectors.
And you say it's the only way and the costs are coming down. Where do you see prices moving? Because a lot of the reticence at times has to do with the pricing, that some argue, well, it's still not the cheapest option on the market.
So when I was first working in hydrogen in 2004, it was costing $1,000 per megawatt hour. 2010, $600. Today, $100, and we see it going down to $50 in 5 years' time, and to going down to $25 per megawatt hour in the next 10 years or so, which is a quarter of where it is today. That's really because renewable energy, and we're talking green hydrogen here, renewable energy costs are falling, but the cost of making the electrolyzer, which is the kit that you use to convert solar or wind energy and water into hydrogen, the cost of this kit is falling a lot because it doesn't really exist on an industrial scale. So as we build up capacity, we industrialize it, we standardize it, and we squeeze costs out. That's really the cost trajectory.
And for that, of course, you need demand, however, for governments and also institutions to kind of buy into this idea that it is the future and we want to invest and create infrastructure. What are they telling you? When you speak to governments, when you speak to officials, are they keen on this?
They're very keen. So the Department of Energy shares our view in the States of getting to below $1 a kilo, which is $25 a megawatt hour. The European Union has a hydrogen strategy, which is very clear, and several member states have the same. Chile wants to export a lot of hydrogen. China's big on hydrogen. Australia's very big on hydrogen. Japan is blending already hydrogen. So I would say the world is now really focused on this because it's the only way to store energy for a long period of time economically is to convert it into either a liquid or a gas.
And of course, you talk about the price, but the other big component is the volume. You know, how big can you go? Where do you see that on a time scale?
So wherever it's sunny or windy, you can produce very cheap hydrogen eventually. And so compared to oil and gas, which are concentrated in a few parts of the world, it's going to be very democratic from that point of view. So every sunny place, every desert, every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As I said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big, big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling cost of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working in that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP, and I think what's really important is to see in the coming years how quick it's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the project. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line. We'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. Bloomberg's World Headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
And a very good afternoon, everyone. Live from the Bloomberg Interactive Brokers studio, streaming on YouTube. We're also on Bloomberg Quick Take. It is Monday, November 7, 2022. We're talking about football, college football, but we'll get to that in just, or just college in general. I'm Carol Masser. Tim Stenovic is off this week. Joining me is host of Bloomberg Surveillance and Bloomberg Markets. We're talking about Paul Sweeney. And Paul, we're up, but I feel like it's been a bit of a tortured trade today.
It is. It's been a kind of a trade. I just put up my GIP function for the S&P 500 to get my intraday chart, and we're just at about the highs for the day. So starting to work higher in the afternoon a little bit here. But of course, the midterms tomorrow. Right. I think we have to pay attention to that. That's what I'm being told. And then, of course, the inflation data on Thursday.
Yeah, this will keep us busy, and this will keep up the volatility in the financial markets. With that in mind, that we are going to talk about those midterm elections and about the TikTok investor billionaire and top Republican donor. He's one and the same. He's staking his fortune on the GOP. We're going to talk about Apple trimming those new iPhone outputs by 3 million. I think this is according to reports, right? We haven't gotten...
Right. I think we have this.
We have this, right? It's a Bloomberg exclusive story. And we've got Apple shares, some movement on that. We're going to talk about impounding of those Russian super yachts. You know,
great story.
Even though you put them, you dock them, it costs money to keep them there.
I forgot about that. I think the government did too.
You got to run the engines and a couple of things as well. We're also going to talk with the CEO of the car sharing platform Turo. So a lot coming up on this Monday. Let's begin though with a check on that volatile trade, and as we move towards our highs of the session, at least, Charlie, on the S&P and the Dow.
Indeed, and we've got stocks floating higher right now with the S&P up by 20 points. That is a gain of about 0.5%. Carol, as you say, best level of the day. You run the GIP chart on the Bloomberg for the S&P index, best level right now. The Dow also at the best level, another leg up in the past few minutes, up by 340 points. That is a gain of 1%. NASDAQ is up 29, higher now by 0.3%. 10-year yield at 4.19%. The 2-year 4.70%. Spot gold down 0.3%, 16.76 the ounce, and West Texas Intermediate crude oil today down 0.8%, 91.85 a barrel. Going to be quoting natural gas a lot today. It is surging now, up by 8.3%. Nat gas 6.93 per million BTUs. Stocks higher. Choppy session though. Investors focusing on midterm elections and inflation readings later in the week. We will be getting the CPI report on Thursday. Katrina Dudley is portfolio strategist at the Franklin Mutual Series, and she told us this morning on Bloomberg Television and Radio the Fed is slowing its pace of rate increases. And that's what she had to say this morning when she was interviewed on Bloomberg Radio and Television.
I think that we're looking at probably 50 going into the end of the year and another maybe 25 in the early part of 2023, because inflation, even though we're starting to see signs that it's coming down, it is still significantly higher than when the Fed wants it. And they've been very deliberate in their communication that they will use monetary policy as their tool to control inflation.
Briefly, Verb Therapeutic shares plunging after regulators put development of the company's lead gene editing drug candidate on hold. Stock is down by 27%. Blue Apron Holdings, the meal kit delivery platform, plunging to a record low today after withdrawing its forecast. Blue Apron shares down 15%. And Carvana shares have resumed their steep plunge from Friday when several Wall Street analysts struck a cautious note on the online used car dealer. Today, Carvana down by 17.1%. Recapping, stocks higher, S&P up 0.5. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. All right, let's get to the Market Drivers Report. And let's set the Business Week agenda. We like a little bit of music.
Yeah.
Boy, it's, after a weekend, it's just hard to get going. All right, let's get to it with Mike Regan's in the house, senior editor at Bloomberg Markets. He's here in our Interactive Brokers studio, along with Emily Grafeo, cross-asset reporter at Bloomberg News, also, as I mentioned, in studio. All right, so since Emily, you talked about that you're watching the midterm elections. How is that playing in potentially into the trade that we're seeing today?
So there's been a number of strategists talking about how the midterms are going to be good
for stocks. Morgan Stanley's Mike Wilson is one of them, RBC's Lori Calvasina, but there's actually a lot of historical data that speaks to that and could potentially explain.
No matter the outcome? Or?
Yeah, no matter the outcome. So in the 19 midterm election years since 1946, stocks have advanced from late October through the year end every single time except for 2018. And that's according to Bloomberg's Elena Popina and LPL Financial. So there's a case to be made that no matter the outcome, we'll see a little bit of a year-end rally. But it makes sense because we know that markets don't like uncertainty. So just the fact that this event is over causes some relief in the equity market.
But is there something to do with like it because it's a split Congress? Or
Yes.
like what is there a factor among those 18 where we've seen, right, stocks advance?
Yeah, well, so we also know that markets don't like uncertainty and they like divided government. So a lot of the polls, and this is what a number of the strategists have been saying, the polls look like we will get a Republican at least controlling some part of Congress, and so that will lead to divided government, and then that decreases the likelihood that there'll be some regulation that's passed that could impact businesses and make for volatile markets.
Could be good, I guess.
Yeah,
So,
in a
Mike,
weird way.
I'm still old school. I'm still waiting for Thursday, the CPI data point, because that's going to influence what my Federal Reserve is going to do going forward to some extent.
Inflation, like it matters?
Like it matters. And here's the inflation data point of the day. Courtesy of Rich Truman, producer of Surveillance. His favorite bowl of pasta from his favorite restaurant on Long Island, $18 pre-pandemic, $23 when the doors reopened, $32 this weekend. He just couldn't order it. That's inflation.
Well, I need to know what else is in that pasta. That's an expensive bowl of spaghetti.
What is Long Island? So, but I mean, what are we going to find out Thursday, do you think?
Well, CPI is expected to have cooled a little bit further. The median estimate is for it to hit 7.9%. So at least, with any luck, knock on wood, get back below that 8%. Core is expected to be cool down a little bit to 6.5% year over year. So, obviously a surprise to the downside if we get anything lower than those numbers. I think it's off to the races clearly. But it's just one of those days. We're sort of in the holding pattern in between both of these event risks, and buckle up your seatbelts is all I could say. I like I've read so many different midterm analysis for this year. The one thing that makes me nervous about, stocks have rallied, and I get nervous easily, I'll admit that, but stocks have rallied for every midterm since 1946, except one. Oh, by the one, that one was the last one. Right. So whatever the exception is the last time, I think it's worth pointing out. But the other thing is, though, it's not just that midterm bounce you get. The third year of a presidential cycle, in other words, next year, is also historically the most bullish. So something like Cameron Christ broke it down, and through every possible time frame, it's something like 16, 17% a year rally for the market. So you certainly have this sort of historic seasonality behind you. I think one thing a lot of people are worried about is, what if we don't have the results right away? January 6th is still fresh in everyone's mind. There is a little bit of risk there embedded into sort of an uncertain outcome.
I would say with the elections, we all have to just get used to that. We're probably not going to have decisions, especially because more and more people are mailing in, and that takes time. And so it's not like, freak out, which is what we did presidential, right? Because this was a new thing for us. But I think this is becoming more the norm as an increasing number of Americans vote ahead of time. So we need to understand it's going to take a few days.
I mailed it in, as it were.
I've been mailing it in for years.
Exactly.
What about, go back to Mike Wilson, though, because I think he is saying something, too, about tech job cuts. We're seeing it big time, right? There's a couple of stories. But if we start to see that broadening out, that might be also an indication that companies are quickly cutting costs, and maybe that helps us get to a bottom?
Yeah. Reports, in his view, it's not going to be about the Fed pivot or the Fed pause. In his view, it's going to be about once these companies, really pull back on their fundamentals and we see it reflected in the earnings, that's going to mark the stock bottom. But on the Fed front, I was running EcoGo on my Bloomberg terminal, and I saw that we have 6 Fed speakers on Thursday.
What could go wrong? What could possibly go wrong
on CPI day? So I think just bracing for more volatility.
John Williams, Tom Barkin, Esther George, Loretta Mester. I mean, there's so many. I'm curious what's the message they go for. All right, guys, thank you. Mike and Emily, thank you. All right, let's get back to World and National News. Nancy Lyons in D.C. Hey, Nance.
Closing in
Democrats may be getting some help in tight Senate races with voters splitting their tickets in key battlegrounds.
Polling data from 7 important states suggests voters could pick a senator from one party and a governor from another. In at least 4 of those states, the Real Clear Politics averages show the Democratic Senate candidate gains more support than the Democrat running for governor, sometimes by an average of 16 percentage points. But it might not be enough to help the Democrats running in tight races in Arizona, Georgia, Nevada, and Pennsylvania. In Washington, I'm Nathan Hager, Bloomberg Radio.
UN Secretary General Antonio Guterres says, quote, "We are on a highway to climate hell with our foot on the accelerator." He spoke at the COP27 climate change conference in Egypt.
The clock is ticking. We are in the fight of our lives, and we are losing. Greenhouse gas emissions keep growing. Global temperatures keep rising.
Gutierrez says humanity must cooperate or perish, saying rich industrialized nations must lead the way. Michael Bloomberg, founder and majority owner of Bloomberg LP, the parent of Bloomberg Radio, is the UN Special Envoy on Climate Ambition and Solutions. Well, there's still no winner in the Powerball lottery, and that means the jackpot for tonight's drawing is at a level never seen before, $1.9 billion. That's after nobody won the top prize Saturday. The odds of winning the big jackpot, 1 in 292 million. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. All right, guys, it's Monday, November 7th. Carol Massar, Paul Sweeney in for Tim Stanovic. And, yep, we got midterms tomorrow. People have voted a lot already. And Elon Musk, who has no problem weighing in on everything and anything, weighing in on the vote.
Yeah, Bloomberg News has got a great story out today. Twitter owner Elon Musk told his audience of more than 100 million followers on the social media platform to vote for Republicans on the eve of midterm elections where Democrats are poised for losses. And here's his logic, I think. Quote, to independent-minded voters, shared power curbs the worst excesses of both parties. Therefore, I recommend voting for a Republican Congress, given that the presidency is Democratic, Musk wrote. So that's his logic, and he tweeted that out to, again, 100 million of his followers.
So he likes a split. You know, he basically likes the tensions, right?
Yeah, and as Emily was just mentioning before, there's lots of studies that show and lots of data to support that, you know, the stock market likes a kind of a gridlocked government, if you will.
Right, exactly. Musk, who, as you know, CEO of Tesla, pointed out that independent voters are often pivotal. He also, I guess, said in another tweet, hardcore Democrats or Republicans never vote for the other side, so independent voters are the ones who actually decide who is in charge. So out there front and center. In the meantime, we should point out another story by our Kurt Wagner and Ed Ludlow. Twitter heading into its second full work week under Elon Musk with half of its workforce mounting losses and a couple of unexpected reversals to its plans. It does sound like things are fast and furious, and it's like, wait, we let people go? Wait, bring some of them back.
Yeah, this seems like vintage Elon Musk, you know, break it, and then we'll come back and see if we have to fix anything here. But, you know, I kind of thought we wouldn't be hearing from Ed Ludlow and Kurt Wagner on Twitter anymore. Now that it's a private company, I thought it was going to be old news, but it seems like Elon's going to keep it front and center for a long time. But again, right at the midterm elections, this type of news gets, I think, more scrutiny.
Yeah, well, you know, laid off, close to 3,700 people on Friday, and then reached out soon after to bring dozens of employees back who maybe were fired in error. So it's still on our radar. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, NASDAQ, they're all pushing higher. We've got a roughly 400-point jump right now for the Dow Jones Industrial Average, up 1.2%. S&P's up 28, higher by 0.8%, while NASDAQ is up 62 for the NASDAQ Composite Index. That is a gain right now of just about 0.6%. The 10-year yield, 4.19%, with a 2-year 4.71%. Spot gold is down $5 the ounce to $16.76, drop there of 0.3%. A retreat for crude, down 0.9% right now. WTI 91.77 a barrel. But the big story today, the surge in natural gas up 7.5%, $6.88 right now per million BTUs on that gas. Stocks are pushing hard. Choppy session though. Investors are focused on midterm elections and inflation readings, specifically the CPI, later on in the week. After the bell today, among some of the names, there will be a lot of them, but among the big names reporting will be Lyft. Shares higher now by 1.1%. Crosstown rival Uber, its shares are trading lower. Uber down by 1.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, gotcha, Charlie. Thank you so much. Well, so many Americans have already voted. Many more to come tomorrow as U.S. citizens head to the polls in the midterm elections. With that in mind, a few stories on our radar involving the midterm poll, and one has to do with really, actually several, the billionaires, the donors, the billionaire donors, and who they are supporting.
Yeah, it's interesting. We have two great stories here. And again, it's all about money in politics.
Big money, right?
And we're talking the big money. Amanda Albright joins us here. She's a wealth team reporter for Bloomberg News, joining us here in our Bloomberg Interactive Broker studio. And Laura, Amanda, let's start with the story you and Laura Davison wrote here. Billionaire GOP donors overwhelm Democrats. So you've got a chart in here. And like of the top 10 big billionaire political donors, there's 8 supporting Republicans and 2 givers supporting Democrats. That's a little bit unbalanced. Where did that come from?
Yeah, so Republicans really have the edge with the billionaire contingent this midterm season. You know, the top donors, the top 100 donors, according to Open Secrets, are, you know, by and large backing Republican candidates in federal elections this year. They've really increased their giving from the last midterm cycle, which is just another sign of kind of the, you know, the edge that the GOP has heading into, I guess, Tuesday. It's already here. So there's a lot of big names that have been really big donors. Ken Griffin, he's gotten a lot of press for his donations this year. And so Republicans really have gotten the edge from this group.
Why are they doing this?
So it's a great question. So some folks say that it's a desire to keep taxes low. So maybe they want a repeat of what happened under President Trump. And there's also, kind of interestingly, this theory that, you know, billionaires might favor divided government. They might favor a stalemate. It's interesting because
Paul, we have a theme today.
Yes, we do.
So Elon, in his tweets about, you know, wanting divided government, I think that speaks to a desire for a little bit of a stalemate and not too much rocking of the boat in Washington, D.C.
Yeah, you have a great chart in here that just kind of shows as recently as 2016, you know, when you're looking at the mega donors in terms of total dollars, it was pretty even between Democrats and Republicans. And then starting in 2018, the Republicans, really in 2020 and 2022, the Republicans really stepped it up.
Yeah, and I think that speaks to, you know, who is galvanized in an election year. And so, you know, it really just seems like this year, Republicans, they have a lot more energy among this contingent getting donations.
Isn't it interesting, because we talked about when Donald Trump came to the White House, how many like small contributions, right? Individuals, normal, quote unquote, you know, U.S. citizens just giving a few dollars, but there were lots of them. So it's interesting to see, you know, the billionaires step up. We should point out that Michael R. Bloomberg, the majority owner of Bloomberg News, parent Bloomberg LP, of course, of Bloomberg Business Week, Bloomberg Radio, has been a major donor to Democratic candidates and causes this specific election cycle. Having said that, can we talk about one billionaire that both Paul and I are like, who is this dude? But anyway, can you tell us a little bit about a story that Tom Maloney wrote? He's a Bloomberg News editor, and he wrote about this billionaire trader, made money off of TikTok, which we know everybody's kind of after, including the GOP, and yet this dude is weighing his hopes, it feels like, on the GOP.
Yeah, so Tom had a really interesting story today about Jeff Yoss, who's the founder of Susquehanna, which is a market-making firm. It's known for being a big trader of options and equities, and it's actually a competitor to Citadel, so Ken Griffin's Citadel. And so Yoss has really made his $33 billion fortune from being an early backer of ByteDance, which is the developer of TikTok. What makes this story so interesting is that, there's been bipartisan criticisms of TikTok in Congress, including by the White House. And so his story kind of points out that a lot of the Republican critics of TikTok, their party is actually getting a lot of support from Jeff Yoss through his donations this year, and he's really stepped up his giving as well.
Yeah, there's another great chart in here that just shows, over the last 10 years, he's gone from being, a small giver to now $47 million just for this midterm. So this is something he's really stepped up and become much political. And I wasn't even aware of this gentleman and his wife, just in general. But, because Susquehanna is a big trading operation. Right. Then I'm sure his TikTok stake is worth a pretty penny. So he's really putting his money, I guess, where his mouth is.
Absolutely, and I should also point out that I believe he's Pennsylvania's richest resident, so he's also gotten involved in the local races there, so the Senate race, and I believe the governor's race as well. So he's also getting involved in Pennsylvania politics, and that might also speak to why you haven't heard of him. He's not a New York Wall Streeter who's really open about his beliefs.
What I love about stories like this is I feel like, Amanda, the politics, the connections. Here's somebody who's made a lot of money, right? Has a big position still in ByteDance and TikTok, and yet he's hoping for a GOP win, is backing a lot, pouring a lot of money, and at the same time, the GOP are pretty critical of that company. So you wonder about the conversations, or they don't care.
Definitely.
Like, as many politicians, just show me the money is basically something, right, in terms of support for campaigns.
Absolutely. And the tech reporters at Bloomberg have done some great stories about TikTok's lobbying efforts in Congress, and so you have to wonder if that's come up in their conversations as well. TikTok is such an interesting story right now.
Yeah, there's just so many issues that are out there, right, that are kind of going before either congressmen or various politicians, and at the same time, it's also where a lot of the money comes when it comes to running a political campaign.
And Carol, guess who's still top of the list of those big donors?
Mr. Soros?
Mr. Soros, George Soros, $128 million so far in this cycle.
He has been for such a long time,
Such a long time, right?
It's pretty dramatic. Great reporting. So glad we could check in with you, and so timely, of course, with the midterms tomorrow. Amanda Albright, Wealth Team reporter at Bloomberg News, here in our studio. Check out her stories at Amanda_Albright on Twitter, and then, of course, you can also go to Bloomberg.com for her story, as well as Tom Maloney's story. You are listening and watching Bloomberg Business Week.